all eyes, make no mistake, right now within tech are on AI and everything within that ecosystem.
The only thing more impressive than the performance of semiconductors has been that volatility.
Hyperscalers are punching above their weight here.
You are likely to see some unwind in momentum.
The choice is you stay involved or you fall behind.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, oil pairing gains. The Iranians suggesting they're receiving proposals from mediators as the United States is exchanging strikes for 9 consecutive days, leaving Brent close to 90, pushing gasoline prices through $4 a gallon for the first time in a month.
There's a tug of war right now going on in markets from this feeling that we had last week of disinflation, of the worst ramifications from the Middle East coming to the fore versus the reality on the ground, which is escalating rapidly in a sense that maybe there isn't an off-ramp. Today's news really does seem to fly against some of what we heard over the weekend with Iran. Nonetheless, there are no tankers getting through the Strait of Hormuz, or almost nothing. So the reality on the ground is pressing toward something that looks like a more significant escalation.
What we've seen over the weekend is definitely a heightened escalation between these two. The United States last night as of 10 p.m., according to CENTCOM, went through with a 9th straight day of airstrikes. New York Times this morning is reporting that they're going to be sending F-16 fighter jets from Germany and F-35 jets from Britain. You can see that this continues to escalate. And what did we hear from Jeff Curry last week? You have to look at not just what's going on in the oil prices, but Jonathan, as you said, it's the product. And this morning, $4 a gallon for gasoline across the United States is a big signal.
Check out the bond market too this morning. Check out 2s, 10s and 30s. We'll start at the very front end of the curve. 2's still around 420. Can't get away from 420, even with softer CPI, softer PPI. Entering the blackout period for the Federal Reserve's next meeting, that's about 10 days away, comfortably above their policy rate. This debate is not over. The Cleveland Fed president, Beth Hammack, going into the weekend with a pretty punchy statement.
Yeah, and we've heard this from others as well, this concept that right now inflation is widening, broadening beyond just oil. They're worried about AI. They're worried about not getting inflation under control for more than 5 years. This is the reason why you have this tug of war, because on the flip side, you've seen the disinflation come through with the weakest CPI print in about 6 years coming last week, at the same time that this fight is not over. And we've heard that from Kevin Warsh as well. The hawks are still hawking on the Fed committee at the same time that Kevin Warsh isn't tipping his hat. Now we've got the ECB squarely on deck on Thursday. Do they lean into the inflation narrative and the fight inflation narrative, or do they lean into we can wait just a little bit? Maybe this is just sort of transitory.
Brent crude this morning, 88, WTI around 82. Coming up this hour, we'll catch up with Lori Calvasina of RBC on why she's upgrading tech. Steve Cook of the Council on Foreign Relations as US-Iran attacks intensify. And we'll touch base with Herr of JPMorgan Asset Management as hyperscaler debt weighs on portfolios. We begin this hour with stocks higher following the worst week in nearly a month. Lori Calvasina of RBC upgrading tech to overweight, writing, we still see a path higher for US equities in the year ahead. Admittedly, with some twists and turns, very likely. Lori joins us now for more. Lori, welcome to the programme. It's good to catch up with you. Tech had a difficult week last week. Chips entering bear market territory. Why the upgrade into this week?
So look, we upgraded the sector last week, and we had been hearing for quite some time back in May, frankly, that investors were looking to take some chips off the table with this trade. And essentially, what we've been hearing in recent weeks is that people think that there's a bit of profit taking, momentum unwind, but that things are really more technical than fundamental in nature. And those are the kind of environments we want to step into and look for opportunities. If you look on the other side of technology, we're actually seeing something interesting on software as well, which is that valuations, which when we look across the Russell 3000 had gotten back to tech bubble highs back around COVID, they've been compressing ever since. And we're now starting to see historically low valuations on the software side. So it's not just a question of kind of looking at semis and saying, is there a potential to step in here after there's been too much pain, but it's looking at the other side of the trade as well. Jonathan, I will say the other thing, we made a number of different upgrades last week. And one of the ones that really, frankly, caught more investor attention was some commentary we made underweight on industrials. We didn't actually make a move on it. We said we had considered it for a downgrade to underweight simply because of how expensive those valuations continue to look. And if you look at our valuation model, the tech sector has kind of moved to the middle of the grid in the S&P 500, basically around average if you look at a median multiple on both an absolute and relative basis. But industrials continues to stick out like a sore thumb. It has also benefited from the AI trade, but it is one that still has, despite some fantastic fundamentals, really does have the biggest valuation problem in the market right now.
Laurie, to your point, we're learning a lot about price and positioning, given the recent price action over the last week. One of the upgrades, if we can bring up that full screen again, that graphic, the other upgrade that caught my eye is your outlook on consumer discretionary. Small upgrade there as well, Laurie. What did we hear from the banks last week that really validates this move into consumer discretionary?
So look, I think we continue to hear from the financials that the consumer is still in good shape. And a number of them made a point of saying that they are seeing some resilience across cohorts. Now, maybe some of these banks, right, don't go to the lowest cohort that, say, shows up into the Michigan survey. But they did talk about how that strength was fairly broad-based across the statistics and across the cohorts. I think at the end of the day, we are going to get more granularity from the consumer companies in the days ahead. And we'll probably hear more things about, kind of pickiness and value consciousness and choicefulness and those sorts of things. But in aggregate, what the banks are telling us is that both their corporates and their consumer customers are still in good shape. And on the upgrade, Jonathan, we were basically sitting at an underweight, and we'd been there for quite some time. And we found that in recent months, as investors were, kind of contemplating other alternatives in the market to tech, they were kind of poking at us a little bit on that underweight. And they weren't telling me they were bullish, but they were curious and they were interested in talking about it. We did a survey of our analysts recently, and across the globe, not just in the U.S., negative views on the consumer sectors were pretty deep and rampant. And we looked at things like the UMISH survey, which reported again on Friday, with inflections starting to occur. And we said, are there still pressures in the market? Of course. But is this an area we want to be underweight? It felt like a pain trade was starting to set up there. So we took that off and moved back to neutral.
Laurie, can you have a stronger consumer without inflation? And this really goes to the core of your call, your 8150 call for the year end. Because of the bond stock correlation that started to reassert itself, can you have that continue with consumer discretionary starting to outperform?
Look, I think that the consumer, at the end of the day, it's an important part of the economy. I think that the consumer is displaying real resiliency. And that word resiliency is something that we also hear from corporate America as well on the C-suite. And I think that resiliency is what has to continue to help us get to the 8150. That's a 12-month target. It's not a year-end target. It's not a move that we have expected to be linear. We do expect some bumps and bruises along the way, some recalibrations. But at the end of the day, we do think that, sort of the consumer hanging in there is part of that call.
With respect to inflation, though, and this is something John was talking about, Beth Hammack of the Cleveland Federal Reserve on Friday saying for the first time ever, she's hearing from companies saying you need to take action on inflation. At what point are we going to start to see that bleed into some of the valuations if the Fed seems more live, seems more ready to take action?
Well, look, I think on inflation, there are a few different fronts you can attack this on. If you look at the consumer companies, we have seen some retracement on prices. I think the consumer staple companies in particular, they've just been jamming price down the throats of the consumer for years and finally seem to have gotten the message they have to back off. And a lot of that has come from consumer behavior. We've seen in prior reporting seasons that companies have talked about the adjustments to kind of basket size and that sort of thing that consumers have been making. I think on the corporate side, I'm really keen to see what the industrials have to say, because they have been a sector that has just pushed through price, just pushed it through consistently, not seeing any pushback. I don't necessarily expect anything to change there, but we are going to be monitoring that tone very, very closely. And I'll tell you, Lisa, as a forecaster and as a consumer of inflation forecasts in the year ahead, not someone who actually has to put pen to paper on those, I think that the street still has some work to do this summer in terms of figuring out exactly where those forecasts are headed. Because of base effects, for example, the 2Q numbers look like they're coming down pretty precipitously. But of course, we've still got gas price pressures here, and we've still got, sort of the everyday price pressures that people are living through. So I think it's sort of interesting, as a forecaster, when I plug those things into my model to see how they play through. But I think the street's still doing some hard thinking about where those are headed.
Laurie, as you mentioned, gas prices getting a little bit more challenging this morning. We've crossed $4 a gallon across the continental United States. Is there a number that would upend your model in terms of your price target if gas continuously goes higher?
So gas prices are not a direct input into our modeling. Where our model for our 8150 comes from, it's 5 different models. There's a valuation and earnings model that keeps sitting sort of right in the middle that helps determine, kind of where things go. And there is an inflation input into that, which is a headline inflation number. So that's one way it could manifest. But I would say in terms of gas prices, we'd really have to sort of look through. We've got 3% inflation baked in, which is pretty well ahead of both our economists and the consensus estimates right now. The other sort of read through is on the GDP side, right? So if gas prices start to impinge on GDP forecasts, which have been moving up, Annmarie, like we were sort of sitting at this 2% for consensus, slightly below 2% for early next year for RBC's economists, and they've both kind of moved up to this low 2% range. But if we were to see sort of gas prices, sort of take a bite out of the economic outlook, it wouldn't have to be a massive one, but if it pushed us back down a bit, I think that's something that could impact our forecast as well.
It's nice to see a normal-sized IPO coming through this morning as well. You know the same thing, Lisa. A normal-sized equity capital raise here, just a little north of $1 billion.
Jersey Mike's sub seeks to raise, again, we're not talking about $100 billion. We're not talking about $1 trillion valuation. So it's kind of nice if you want a sub, you can know that it's actually a normal company that's coming to market to raise money. I also love that they've been doing well. They've been advertising. They have very good sandwiches. Like to see this.
Okay, good. An
Thanks.
endorsement.
Yeah.
Laurie, just to weigh in on this, and not on the quality of the sandwiches over at Jersey Mike's, but the size of the supply that we're seeing, Alphabet, a record IPO from SpaceX, SK Hynix as well. This is small fry, considering. Laurie, I just want your opinion on supply and how that might constrain the outlook for equities from here and through the summer.
So look, I would say these issues come up from time to time in our conversations, but the reality is, we think about sort of the opportunity set that small cap investors in particular have. I'm not hearing as much, frankly, about the IPO market. I'm hearing more about the potential for M&A to start to broaden out. That's where there seems to be some excitement, in sort of that smaller end of the market cap spectrum. I think also, when we talk about these issues, we sort of think about froth in the general market. I see very mixed things on indicators across the board. If you look at the consumer conference board data on stock market optimism, things look pretty extended, right? The retail investor looks pretty euphoric on equities going forward. But when we look at things like AAII, sentiment's much more subdued. When we look at things like CFTC, positioning's not all that full. So those are how, sort of sentiment issues, kind of deal activity. Those are kinds of the issues we're hearing about. But it's really, frankly, more on the M&A side and kind of more of this muddled picture on the sentiment side. I don't really have a strong view on the supply dynamics, to be honest.
Laurie, appreciate it. Thank you. Laurie Calvasina there of RBC. We'll talk about these supply dynamics with regards to the debt market a little bit later in the programme. Equity futures this morning doing OK, up by a third of 1% on the S&P, following the biggest one-day loss we've seen so far this month in Friday's session, a small bounce. Let's get you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. U.S. Central Command saying it completed a 9th straight day of attacks on Iran, targeting the country's command centres, its missile and drone launch sites, and its communications network. Iranian strikes over the weekend killing 2 U.S. service members, bringing the U.S. death toll now to 17 since the war began. The Trump administration is considering a new independent regulator to oversee AI safety. Sources telling us here at Bloomberg the proposal, developed with input from Treasury Secretary Scott Bessent, would create an agency that reports to the SEC. Spain winning the FIFA World Cup, defeating Lionel Messi's Argentina 1-0 in extra time. Substitute Ferran Torres scoring the lone goal of the game. President Donald Trump and FIFA President Gianni Infantino presenting the trophy to the Spanish team. That's your Bloomberg brief. John.
Vonnie, thank you. Can we have a FIFA-free zone when we talk about the World Cup?
I think that would be advisable.
When I was a kid, we'd just talk about the World Cup. We would never even talk about the governing body. You just talk about the World Cup, now it's the FIFA World Cup.
I know.
It's Gianni Infantino every time you look up at the screen.
I was actually at a bar watching one of the games, and there were French fans, there were Spanish fans, they were cheering, they were so excited, they were chanting, nice friendly rivalry, and every time the president of FIFA came up on the screen, it united everybody.
It's bringing fans together.
It brought fans together, everybody booed.
No one
Every single booed.
No one
every
likes
single
FIFA.
person.
Redefining dominance yesterday in that game. Just totally redefining dominance. Dominant on almost every metric with the exception of yellow cards and red cards.
You mean
Fouls.
no shots on goal by the Argentinian team? Look, it was interesting to see that the loser bowl between the third and fourth games
was a good
actually
time.
much more exciting than the actual World
I
Cup.
find that game so ridiculous.
You can find it ridiculous,
playoff.
but it was actually a really exciting one to watch.
Yeah, okay. We'll have more on the World Cup for you later this hour. I agree, it was exciting.
Yeah, I mean, it might be irrelevant, but whatever. Okay, but it was
just
still
a lack of intensity and effort from.
You mean it felt like a high school game
for the first half? Right. Okay, let's talk about some serious issues. Up next on the programme, the struggle for the Strait.
We hit them very hard again tonight. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. We control the Strait. They don't control anything.
Up next, we'll catch up with Stephen Cook of the Council on Foreign Relations, live from New York City this morning. Good morning. It's the handover of power in the United Kingdom from Sir Keir Starmer to the former Mayor of Manchester, Andy Burnham, happening right now. The outgoing Prime Minister Keir Starmer addressing the nation from number 10 Downing Street. By now, you will be very, very familiar with the proceedings because we're about to have the 7th Prime Minister in about a decade. These proceedings are becoming routine.
Yeah, which is part of the problem and start of what Andy Burnham has to start to remedy. How does he give confidence that he can rule for more than 6 months, 12 months, or, God forbid, a Liz Truss kind of 3-day situation at a time when there's huge division? And frankly, he's trying to shore up support for being pro-business, despite some of his rhetoric over the past couple of months and years.
In a few moments' time, Sir Keir Starmer will leave number 10 Downing Street and head to the King to offer his resignation. Then in the next few hours or so, we'll hear from Andy Burnham from number 10 Downing Street before he takes over as Prime Minister. Andy Burnham has said, make no mistake, I will be a pro-business leader of the Labour Party. The early outlook will be defined by whoever he selects as the Chancellor of the Exchequer. We should find that out too in the next few hours. Let's take a look at the price action. Equity futures this morning on the S&P firmer by 0.25%. On the Nasdaq 100 up by 0.6. Last week shaky. Chip stocks entering bear market territory. Some weakness out there in this equity market. Look at the bulls, becoming slightly less bullish. Max Kettner of HSBC. Typically, I'd get a note from Max, and it would read as follows. Max overweight.
Yeah.
These are all the reasons I like risk, and these are all the reasons you shouldn't care about the risk. Second to last paragraph in this note, he gets very close to talking about a reduction of risk.
Yeah, he sees some proper emerging warning signs at this point, saying in light of this broadening, our sentiment and positioning framework has also started to flash some warning signs, saying it may well be time to reduce risk in portfolios after the peak earnings season in 2 weeks. So he's still saying not yet, but after the peak earnings season in the next 2 weeks. And talking about Kimi K3, what we heard from Moonshot last week, and a potential rotation under the surface that has kept risk kind of in this narrow range over the past month, which has given a lot of people pause.
Max Kettner from max overweight to just overweight, is it fair to say?
Max overweight
right.
to,
kind of almost there, reducing.
Max
right.
neutral. Does he, Max, come on,
not
tell
quite
us what
yet,
you would say.
but getting closer.
Yeah, Max worried? Max
We'll try and catch up with Max in a few weeks, and Max can sort of phrase it for us. Let's turn to the bond market. 2s, 10s and 30s. Yields up a basis point on 10s, 456. 2s around 420 still. 418.30. Beth Hammack, Cleveland Fed president, pretty hawkish into the weekend, pretty hawkish into the blackout period. The Fed's meeting, not this Wednesday, but the following Wednesday. Under surveillance this morning, let's talk about energy, the struggle for the Strait.
We hit them very hard again tonight. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. We control the Strait. They don't control anything. We're ending any chance where they can have a nuclear missile.
So here's the latest this morning. The US striking Iran for a 9th straight day in the latest show of force to reopen the Strait of Hormuz. Iran's foreign ministry now saying they have received proposals from mediators. Tyler Kendall has the latest. Hey, Tyler.
Hey, John. Well, even as we got signals from both sides that talks are still an option, this was a weekend marked by escalation. CENTCOM says the latest wave of U.S. strikes were designed to degrade Iran's ability to target commercial shipping, but also to, quote, swiftly punish the IRGC in response to the death of 3 American service members. This weekend brought the death toll for U.S. service members to 17 since the war began. And our analysts at Bloomberg Economics say they expect this week to only flare tensions further as President Trump threatens to widen the scope of strikes. Now, Iran's foreign minister said the country won't be forced to negotiate, but the ministry put out this statement saying that the diplomatic apparatus had been active in recent days. And Secretary of State Marco Rubio confirmed as much, saying that the U.S. has repeatedly gotten strong signals that Iran wants to negotiate, but that there appears to be a very big split between the hardliners that want to fight further and the more moderates in the Iranian government that want to strike a deal. And John, we really saw the split on display over the weekend as the IRGC confirmed that it halted at least 4 vessels in the Strait of Hormuz as observable traffic today remains virtually at a standstill.
Tyler Kendall with the latest. More from Tyler in the next hour. Stephen Cook of the Council on Foreign Relations writing the current escalation between the US and Iran is a direct result of an MOU that was negotiated in haste and it's quite weak. Stephen joins us now for more. Steve, welcome back. What is it about this MOU that made it an accident waiting to happen?
Well, the primary provision that concerns the Strait of Hormuz has 2 very different interpretations. The American interpretation is that there would be freedom of navigation in the Strait of Hormuz for 60 days during the period of the MOU. The Iranians believe that they get to administer the Strait of Hormuz and have taken military action to drive home the point. That's how we got here. Diplomats like to say that they can craft agreements where everybody can walk away with a win. Everybody walked away with a win from this, but continued to have the major differences over how the Strait of Hormuz, how transit through the Strait of Hormuz would occur. That's the direct result of just kind of going in and negotiating very, very quickly these extraordinarily difficult issues. The president seemed at the time desperate to end the conflict. He had threatened escalation any number of times only to back off. And as a result, his negotiators agreed to something that did not actually bring the 2 parties together over this crucial question of the Strait of Hormuz.
Stephen, are you seeing any evidence that there is a true debate within the regime from some of the more hardline individuals that want to keep fighting and the moderates that want to get back to the negotiating table?
You know, we hear this all the time, that there's a difference between moderates and radicals within the regime. Regardless of whether there might be a discussion between the foreign minister and the Iranian president and the IRGC commanders always have the upper hand here. They had given Araghchi, the foreign minister, and the president an opportunity to negotiate with the United States. But from their perspective, this is the 3rd time that Iran has been engaged in negotiation with the United States, and it has resulted in an escalation of hostilities. It's a self-serving statement. Of course, the Iranians have been firing on shipping in the Strait of Hormuz, but still, this episode really gives the IRGC an upper hand with those moderates, an upper hand they already had.
Early this morning, the Iranian Foreign Ministry came out and said the diplomatic apparatus has been active in recent days. When they talk about mediators, who are they talking about? Is this the Qataris?
Yeah, the Saudi foreign minister has been on the phone with the Egyptian foreign minister, has also been on the phone with the Qatari foreign minister, no doubt. His Pakistani counterpart as well. These are the countries that have been involved in a mediation. And this is kind of a routine aspect of this conflict, that while the United States and Iran are firing on each other, 3rd parties are trying to put together some sort of diplomatic agreement. At the moment, it doesn't seem as if the president is truly interested in a negotiation. He wants to make a point after these 3 or 4 American service people were killed, but he is always open to negotiation, regardless of what he says.
Stephen Cook of the Council on Foreign Relations. Steve, thank you. Appreciate your reaction to the sad news over the weekend, the loss of 3 servicemen in the United States, to the tension over in the Middle East. Just heartbreaking for anyone involved in that situation at the moment. Losses building up on both sides and no end in sight. Let's put it that way. You've talked about being stuck in purgatory. It certainly feels that way this morning.
And we're seeing more escalation, not just over the weekend, but the New York Times is saying that the United States is sending more aircrafts to the region. Well, that signals that this is going to be potentially a longer conflict, as it's not full-out war. It's not, because they're still hanging on to some sort of negotiation, but it is certainly not peace right now.
You're seeing the pressure in the energy market. Crude near 90, briefly breaching $90 a barrel on Brent this morning, around 88. WTI around 82. Gasoline prices back through $4 per gallon for the first time in about a month. That story not going anywhere. Coming up, Sarah Kunst of Cleo Capital looking ahead to a big week for tech earnings. Alphabet just around the corner. Earnings season begins for big tech. Check it out later this week. Coming up on Wednesday, we'll hear from Alphabet, you'll hear from Tesla. On Thursday, you'll hear from Intel as well. Lisa already teed up what you could hear from the ECB. Is that a live meeting, given this move in energy? The ECB coming up on Thursday. The Federal Reserve the following week. That's the week ahead. Here's the price action. Let's get to the board. The S&P 500 equity futures positive this morning by a third of 1%. On the Nasdaq, up by 0.6. On Friday on the S&P, biggest one-day loss we've seen on the month so far. A two-day losing streak coming into Monday. Those 2 days of losses meaning a down week. The first down week we've seen following a 2-week stretch of gains on the S&P 500. So the setup this morning, a bounce with the chip sector back in a bear market following a major run-up. Sky-high rally for the chips, up by something like 90% in Q2, which is crazy. I don't think you can call chips in a bear market. Bear market territory, sure, but when you're still higher on the year by something like 70%, it's difficult to call this a bear market. That's the equity story. Switch to the board and get to the bond market picture. Let's just sit at the front end of the curve. 2's close to 420. That feels like the center of gravity for this bond market at the moment. We just can't get away from it, even with softer PPI and softer CPI heading into the Fed's meeting a week or so away.
Well, we even heard from Kevin Warsh the fight isn't over, that this isn't mission accomplished in terms of the CPI and PPI reports that we got last week. You still have hawkish members of the Federal Reserve. We keep mentioning Beth Hammack and her discussion in a LinkedIn post on Friday, a real question about how much willingness there will actually be to take action. But ultimately, it does seem like it's broader based. It does seem like it's coming from AI. At this point, it's also coming from the energy sector. This is a moment where suddenly tensions are reigniting, and it's on the distillate products that actually are seeing the bigger gains, the crack spread actually widening out, not just the actual crude and Brent and WTI levels.
You shared the quote from President Hammack in that LinkedIn statement into the weekend. For the first time in my tenure, I'm hearing from businesses who say they think we need to take action to curb inflation.
When I was in a discussion with members, CEOs of some pretty big companies, with Neil Kashkari of the Minneapolis Fed, they essentially were talking about inflation as one of the preeminent concerns for them, and they didn't see it really abating in a material way, saying there was some sort of policy response that might be required. Question is, how much control does the Fed have over some of this inflationary input, and how much is the market going to do the job for them? Ultimately, we're at a pivot point right now, especially with the moonshot Kimi K3 and this question of where exactly the costs are going to come from, and a real existential feeling that maybe we're overbuilding on the AI side, and that could potentially deflate some of the valuations that you're seeing in the market.
They have very little control over this, and by this I'm talking about crude. Brent and WTI. Brent around 90 this morning, $88 a barrel. WTI around 82. As we count you down to the open about 3 hours away, let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with none other than the chip stocks. They are rebounding this morning after, as you said, last week's sell-off pushed them into bear market territory, and this is coming ahead of a pivotal week for tech earnings. Google kicking things off on Wednesday, and the focus will be on AI spending, what Lisa just outlined, especially after the AI breakthrough from the Chinese startup Moonshot reignited these questions about whether these increasingly powerful AI models could be built with far less. Meanwhile, on that note, we are seeing another company push on its AI ambitions, and that is Alibaba. Shares are up 3.5% in the pre-market after unveiling a major upgrade to its flagship Qwen AI model. The company is positioning it as one of the most powerful models out there, adding to the sense that President Xi's push for China to play a bigger role in global AI, something he outlined last week in a speech, is increasingly gaining traction. And we end on Boeing. A number of headlines coming out of the Farnborough Air Show. Shares are up 1% as CEO Kelly Ortberg outlined his vision to our own Guy Johnson. He said, don't expect a new Boeing jet until the end of the next decade. Instead, the priority is getting more 737s out the door, improving cash flow and paying down debt. So the market somewhat rewarding that optimism. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, the US conducting its 9th straight day of strikes on Iran, Tehran continuing to retaliate with attacks on US bases and Kuwait. Crude pairing gains as Iran's foreign ministry says it has received proposals from mediators. Elsewhere, the company behind China's latest AI breakthrough is planning to go public in as early as the next 6 months. Sources telling us here at Bloomberg, Moonshot AI is in talks with investors about a potential listing over in Hong Kong. And finally, you were all watching it. Spain claiming victory over Argentina, 1-0 to capture the World Cup title. More than 15 million people filling stadiums across North America over the last few months, setting records for attendance and ticket prices. The FIFA president floating a 64-team format for the next World Cup in 2030.
Well, maybe they'll make more money, which potentially is the ultimate objective for them. I mean, the idea that they might even sell some of the leftover rings that weren't given to the team gives you a sense of just how much they tried to capitalize on the profits. That said, it was the biggest number of games, and it was the first time that we had a halftime show. I mean, this is sort of trying to take a page from the Super Bowl. Feelings, thoughts, a lot of feelings about the halftime show and whether that was something that people wanted to continue.
I love the halftime show, and last time Shakira's...
Did you?
Yeah, and well, I like Shakira. I thought she was amazing.
I was going to say, that's a select group.
And last time Shakira had a hit that was attached to the World Cup was South Africa when Spain won again. So anytime Shakira comes out with a World Cup hit, potentially it's going to help Spain. In all seriousness, no, I think two things I took away from the World Cup.
Sure.
One, they increased four-year revenue expectations by about $2 billion. Earlier estimates, $9 billion. Okay, so FIFA is inking cash. But more importantly, I think more Americans are interested in soccer now, and that gets me excited because I love soccer.
I'm long the sport and long this country as well, and I hope you're right. I absolutely hope you're right. I think it's been a fantastic World Cup, fantastic host. America, Canada, Mexico have done a brilliant job. I'm going to get to the point in a moment.
Yeah, I know.
I think that the football's been brilliant
I can feel it.
It's been a very high-scoring World Cup. Scored the most amount of goals on record, I believe. The average goal per game close to 3, which I think on that basis is the highest since 1982. So all of those things just brilliant, very entertaining. The world's best players showed up.
But,
I get to the but. FIFA needs to stop.
Yeah, well, I think everyone would agree with that.
Everybody could see right through the hydration breaks and what it was really about. Let's get away from all this nonsense. I don't think that we want to outsource the beautiful game to the governing body to the extent that we risk doing so in the next World Cup and the cycle after that. You can see in who's winning the rights to host the World Cup, what they're trying to achieve. You can see a lot of that is for commercial reasons too. I want to go back to where we were before, where the host of the World Cup was about developing the game, getting it to a place that maybe didn't have access to the kind of ground-up football that we have across Europe. South Africa was a fantastic example of that, for instance. Taking it to places where they don't actually have stadiums, they have to rebuild it from scratch, where people aren't really living and no one's going to visit them after the fact, there's no real legacy. That, we all know what that was about in the last cycle. I hope we get away from that. I fear that we won't. I hope that we stop talking about FIFA and whoever the president is of FIFA. I fear that we won't. I'm quite open to the idea of expanding the tournament, though. And that was something that I had strong feelings about at the beginning of the tournament. I didn't like the expanded format. I'm open to that idea in the next 4 years.
I think everyone would agree with you. This is the irony. Nobody likes FIFA. Everyone thinks that they're absolutely taking everyone for a ride and that they've been completely corrupt. I mean, there are all sorts of things. At the same time, exactly how are they going to be stopped? Because everybody loves the sport and shows up and pays the ticket prices. So here we are.
Here we are, precisely. The legacy for the United States, I think a missed opportunity. I really do think a missed opportunity to get more kids involved in the game in this country. I'll be interested to see what the legacy looks like in 4 to 8 years. I didn't think that 1994 was the right time for this country to host the World Cup. This was the right time. Do I think that FIFA leveraged that moment? I don't think they did at all. And the price of access into these games was, to be honest with you, just disgraceful. And when I hear descriptions of it being like, well, if it's an open market, it's a free market, it's capitalism, I'm sorry, you'll struggle to find a bigger capitalist than me. Football is not about capitalism when a governing body has the monopoly on the World Cup. That's not a free market. Give me a bloody break, right? You know, don't tell me this is about open markets. If you and I wanted to start a World Cup and get the other nations involved to do so, you watch the kind of legal problems we'd have in trying to do that. So this isn't about open markets. They've got a monopoly on the game.
And 1.8 billion people watched, so they have got a lot of eyeballs, and they've got a monopoly when it comes to just how much interest there is around the world. They don't feel like they have to expand so much.
Monopoly on the international tournament, to to be precise. Let's get to the next test for tech. Let's talk about Alphabet earnings due out on Wednesday. Investors looking for returns from massive AI spending. Sarah Kunst of Cleo Capital writing, I don't think the second half of the year will be particularly kind. If you're waiting until things start to go up again in tech names, you might be waiting a long time. Sarah joins us now for more. Sarah, welcome to the program. What are you expecting to hear then from Alphabet? What do you expect to see in a few days' time?
So I'm not super concerned about the Gemini situation, that delay in rollout. I don't think that is a huge deal. I use Gemini. I know a lot of engineers who use Gemini. They are happy with it. It is pretty good. What I'm more concerned about is when you look at last quarter, something like half of Alphabet's net income, tens of billions of dollars, came from their on-paper shares of Anthropic, of SpaceX. That is a lot of money. And now that we see SpaceX live in the markets and we see that stock price going down and down, you do have to wonder, is some of that expectation, does that need to be adjusted down? We don't know what Anthropic's IPO is going to do, but the overall market is looking dicey. And so that's kind of where I'm interested and where I'm a little bit concerned.
Sarah, a lot of people are looking for the CapEx plans to kind of give some guidance as to what the valuations will look like for the Anthropics or the OpenAIs of the world. What are you expecting? Do you think that we're going to see a ratcheting up, a above expectation type of CapEx plan from the likes of Alphabet and from the likes next week when we get Amazon and Microsoft? Or do you think they're going to really listen to the market right now?
I think that they're going to listen to the market a bit. I don't know if they're going to truly change their plans, but I do think that right now this CapEx has been so forward-looking, and we know that companies are looking at their AI bills when they come in and saying, yikes, our bills are going up every month and the productivity is not following. So I wouldn't be surprised if we see a little bit of a pullback in the CapEx, at least right now, while the overall market is not doing great, and it's not the best time to say, surprise, what's another $100 billion among friends to spend on CapEx.
Sarah, will the market reward a below expectation type of CapEx plan, or will they punish it in the expectation that this means that maybe we've overbuilt and overspent already, and it creates this sort of downward cycle that we've seen take hold in a number of different tech sectors?
Well, I think that's the question. I think that this is going to be about storytelling. How do you tell this story? It's been storytelling on the way up, right? Most of these data centers are not built. Most of these chips, a lot of these chips, right, aren't produced. They don't actually own them yet. They kind of own them on paper. This has been sort of a paper rally, and I think it could be a paper slump. And so I think you're going to really see which of these big tech companies can hone that storytelling enough to say, we are not spending as much on CapEx, and here's why that's a good thing.
Sarah, do you think the Kimi K3 model, this potential that we learned about last week, has the potential to be DeepSeek, where we sort of move past it and forget about it, or is it real?
So I think that, China is incredibly good at tech, and I don't really understand why we forget that sometimes. They also have a tech industry that even more than the U.S. is tied to the government, and we know that there is a lot of a big soft power struggle there, and so it is really helpful to the Chinese government to say, just whenever we feel like it, we get to release a new model that says, actually, no, we do know what we're doing, and sort of yank the chain of global markets. And so I don't think that it's a winner-take-all market, and I do think that as long as China is getting this reaction when they announce these new models, we should continue to be expecting these new models. But the thing that I'm actually really interested in this is when you look over at SpaceX and you look at Tesla, everybody thinks that Elon's going to be able to make these Optimus robots, where China is so far ahead on humanoid robots to the extent that anyone even needs a humanoid robot. So if you believe in Chinese tech ascendancy, you should be really concerned about Tesla.
Sarah Kunz of Cleo Capital. Sarah, appreciate it. Thank you. Fantastic final points there on China and its hold over U.S. markets.
Yeah, the idea that you can whipsaw markets and just release a new model and say, wait a second, maybe you don't need to have all this built out. You don't need all this capacity. Just need a bit more of the DRAM, the memory chips that we produce, by the way, and you guys are behind. So, good luck to you for the next couple of weeks. Also, the thing about the robots, I love the dancing robots, the pictures of the dancing robots coming out of China. So even just from a pure entertainment aspect, I think that we all will need a robot in our lives.
They'd like you to be more impressed by the use case, the potential for them to assemble things, Bramo.
I know, but I really enjoy like the different...
The entertainment value.
I think that they're really...
Okay.
I think it would be fantastic. Have a restaurant with like dancing robots, although sometimes they malfunction and they knock things over, so that could be bad.
Okay, you're thinking about this in real time? You're thinking about opening a restaurant in New York with Chinese robots?
Have you seen Chinese robots in restaurants and sort of dancing and entertaining in China and then malfunctioning and knocking things over?
Hitting plates.
By accident.
The Nasdaq down last week, largely off the back of dancing robots and other things, down by 4% on the Nasdaq last week, up this morning by 0.7. Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Secretary of State Marco Rubio saying Chinese President Xi's trip to the U.S. remains on track for September.
When you have two big, powerful countries like the United States and China, there are always going to be irritants. There are always going to be things we don't agree on. But I think it's incumbent on powerful and important countries like ours to continue to talk and have a relationship.
Rubio's comments coming just days after President Trump accused the Chinese government of interfering in the 2020 U.S. election. Andy Burnham will be sworn in as the UK's 7th Prime Minister since Brexit in 2016. Burnham making affordability a key campaign issue as he inherits a struggling economy. He's expected to highlight, quote, hope and unity in his first address as PM later this morning. Gas prices on the rise. AAA saying the national average for a gallon of regular gasoline is now above $4. Energy Secretary Christopher Wright saying the Trump administration is working to bring those prices down.
Gasoline prices today are more than $1 a gallon cheaper than they were 4 years ago under the Biden administration. And we'll do everything we can to drive them further down in the weeks and months ahead.
Wright also saying oil will continue flowing through the Strait of Hormuz with or without Iran's help. And that is your Bloomberg Brief. John.
Bonnie, thank you. Thank you for the update. Up next on the programme, stuffing the debt market.
Investing in hyperscalers right now is like sitting down at a 3-star Michelin restaurant and you don't know how many courses are coming. The hyperscalers are punching above their weight here.
More courses. There are always more courses. Herr of JPMorgan Asset Management joins us next. It's the bounce this morning, up a third of 1% on the S&P, on the Nasdaq up by 0.7, on the Russell small caps up by a third. In the bond market, 2s, 10s and 30s, a light week of data. No Fed speak going into next week's Fed decision. 2 still close to 420, 418.51. Under surveillance this morning, stuffing the debt market.
Investing in hyperscalers right now is like sitting down at a 3-star Michelin restaurant and you don't know how many courses are coming. Right now, they're just adding costs, right? At some point, you cannot just keep on adding costs. If too much supply is coming, you're going to put pressure on everything else. The hyperscalers are punching above their weight here.
So here's the latest this morning. Wall Street preparing for the possibility of even more debt from AI giants. JPMorgan expecting hyperscalers to raise funds to help fuel $1 trillion in capex for 27. Herr of JPMorgan Asset Management writing, AI is running 18% of total investment-grade supply year to date. It was 1/3 of that in 2025. Kate joins us now for more. Kate, good morning.
Good morning, John. Thank you for having me.
Indigestion brewing, do you think, on this side of things?
Let's take a step back and think about the bond market, because I think people don't spend a lot of time, unlike us, thinking about the indices. And the bond indices are debt weighted. So the more debt that anybody issues, the larger their weighting in the benchmark comes. The other thing to think about is the bond market that supply is very lumpy. So if you look at a week like last week or 2 weeks ago, you get some indigestion. So as we just said, you've had, $800 billion worth of capex expectations, $1 trillion worth of capex expectations. That's being funded in the equity markets, in the debt markets, so the loan markets, the securitized markets, the term loan markets. It's being funded everywhere. I think the issue in the bond market is it gets to be indigestion. So what is your expectation for issuance and then what actually comes? So you get a drive-by of $25 billion and people have to make room for that. And I think that's where you see the indigestion.
How do you determine the difference between indigestion and the start of true pushback, given the fact that right now we're looking at investment-grade credit spreads that average below 80 basis points. I mean, this is nothing in terms of a cushion of spread. So at what point do you start to say there's something else going on here?
So I think it's important to take a step back and first off look at the fundamentals. So you've got corporate margins at 25-year highs, and this week, as John said, we're going into a heavy week of earnings this week and next week. What really is going to be important is what do earnings look like here? So in terms of the technical side, there are two aspects to that. The first is we're talking a lot about the supply, but let's look at the demand side. We've had 12 consecutive weeks of inflows into investment-grade funds. So there's a lot of demand for this paper. And you're right, at 77 basis points, spreads are tight versus historical averages, but yields are quite attractive. So if you look at a week like last week alone, you had, I think, $45 billion worth of issuance. And look at the dispersion last week alone. There were no tech, hyperscaler, or anything like that. I think deals were 4 times oversubscribed with 2 basis points of new issue concessions. But look now, a week later, the best performing deal is 10 tighter. The worst performing deal is 10 wider. So there's a lot of movement underneath. And I think what's important is on this AI CapEx is what are the returns on the CapEx going to be and who are the winners and the losers?
One thing that is increasingly stymieing a lot of investors is the idea that the average maturity on the investment grade index in the U.S. is about 10 years, more than 10 years. I'm looking at it right now. And you're seeing issuance for things that are changing in real time. Every week it's a new story, whether it's what's going on with Kimi K3 or what happened with DeepSeek. How do you justify really incredible spend in a field that's changing so quickly that we don't know what it's going to look like in 2 years, in 5 months?
So a lot to unpack in there. And there's a whole range of maturities and distributions. As I said, the hyperscaler CapEx is coming in different markets. If you look at the high yield market, they're not actually materially different from the average index maturity, and we would rather look at duration than maturity, but we're not going to go down that rabbit hole this morning. But I think, I just lost my train of thought there, but it's like, yes, you're right, but this concentration in the bond market, as I was talking about the index composition, you used to have banks. Banks are still the largest percentage. It's a matter of the supply and demand. And you're right, you've got to underwrite it. I think one thing that gives us comfort, though, is if you look at different periods of significant capital investment, so say the shale boom before or the late 90s internet boom, at this point, CapEx is still running materially below cash flow. So you've got the cash flow to generate it. That's what gives you the support. At some point, though, we are going to need returns on this CapEx. And at this point, though, I think the indigestion is really more, you get a lot of supply, you get a drive-by deal of $25 billion. I think we've had 9 deals year to date that are in excess of $20 billion. So you see, you've got to make room for that. You've seen that in particular, the high yield benchmark. But on a market value basis, I think we're looking at 3% of the high yield market is now CapEx, this hyperscaler AI, and it's a little over 4% in the investment grade. So in the broad scheme of the markets, I think quite manageable.
I've got 45 left. How does the extra supply and credit compete for demand with treasuries?
Yeah, it's a good question, and I think there are some concerns. Is this going to crowd out treasuries? I think I would look at it from a different perspective. The reason people buy fixed income is for the yield. And this is all offering additional yield. You're looking at north of 5.25% in investment-grade corporate bonds. You're looking at north of 7% in high-yield bonds. And so that's the opportunity here for retirees, for investors. You're getting yield, and that's why we've seen 12 consecutive weeks of inflows into investment-grade corporate debt.
Kay, it's good to see you. As always, thanks for being here. Kay Herr there of JPMorgan Asset Management on the credit market. And just on the end there, just a nod towards what it might mean for treasuries.
Yeah, and right now the focus is on yield, and if you get extra yield, then that's better. And earlier this year, we were talking about how some of these hyperscalers might have better credit fundamentals than the U.S. government. So that didn't seem to be a concern. I guess that remains a question going forward.
Yield still elevated in the treasury market heading into next week's Fed meeting. Coming up next, we'll catch up with Tchir of Academy, Henrietta Treyz of Veda Partners, and Ron Josey of Citi. The second hour of Bloomberg Surveillance just around the corner.
The focus in the near term is squarely on monetary policy and what do we do with respect to inflation.
Growth looks strong. Inflation is decelerating.
The orthodox policy response to a supply shock of looking through it is probably right.
I am one of those people who believes the Fed is on hold. I do believe we will ultimately get cuts in 2027.
Interest rates are about at a reasonable place. The Federal Reserve should not mess around with them.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action looks like this. Here's the bounce, up a third on the S&P, on the Nasdaq 100, following last week's losses, up by 0.7% in the bond market. 2s, 10s and 30s. 2s coming into this week still around 420, even with softer CPI, softer PPI heading into the Fed's next meeting. The why? Check out the commodity market. Crude, Brent and WTI still elevated. Brent around 90, WTI around 82, unchanged on the session. The situation in the Middle East, anything but unchanged.
Yeah, and last week, crude prices up more than 15% on renewed an escalation in the Middle East. Now we're talking about much more active warfare. Discussions around possibly having a mediator come in and try to bring both sides back to the table. But where exactly would discussions go, given the renewed escalations, given the deaths of U.S. servicemen, and given the buildup of U.S. troops and supplies over in the region? Also, the fact that you've seen all activity through the Strait of Hormuz grind to a halt gives you a sense of just how much the pressure is ramping up.
And it's the Strait of Hormuz that they're fighting over at this moment, at least. The United States, you can see in all of the strikes that they are going after with the IRGC in Iran, as they are trying to degrade their ability to go after commercial shipping in the Strait of Hormuz. They want the Strait of Hormuz to be open. Well, when Iran comes out and says that they received, calls from mediators, they also talk about the fact that they want to fully exercise their sovereignty and prevent any security threats in the Strait of Hormuz, the exact opposite of the United States wants to see, and that is why we are living in this purgatory.
This is putting a squeeze on risk sentiment overall over the last week or so. Much more so, though, as being these moves in tech. Chip stocks entering bear market territory heading into this week right here. Tech earnings on deck. Intel on Thursday, Alphabet and Tesla coming up on Wednesday. The bar for these earnings sky high, and we have learned a lot about positioning and price over the last week with regards to incoming earnings.
Yeah, IBM was a big shot across the bow, and IBM also going to be reporting earnings later this week. A real question about their CapEx plans, especially given the Kimi K3 from Moonshot, the Chinese LLM that came out and really renewed focus on just how much capacity was actually necessary, whether it was really on the memory side of things or whether it was on the semiconductors that the likes of NVIDIA produce. A real question, though, about how long this could be sustained and whether there's overbuild for some of the newer models. Again, there's so many questions around how quickly this is moving and what this is going to look like in 6 months.
Nasdaq futures this morning higher by 0.7%. Coming up this hour, we'll catch up with Peter Tchir of Academy, warning of further downside. Henrietta, Treyz of Veda Partners, with attacks intensifying between the US and Iran. And finally, Josey of Citi, as tech earnings kick off the next test for the AI trade. We begin this hour with stocks and crude rising as Wall Street searches for stability. Peter Tchir of Academy writing, many of the inflection points have demonstrated a clear direction to which way they are headed. But with everything going on, expect more downside for markets. Pete joins us now for more. Pete, good morning.
Morning.
What's the source of that downside risk for you this morning?
I think it's rethinking of what's going on with the AI spend. That's a big part of it, right? Are companies going to continue to spend? Will we see any signs of slowdown? And at the same time, we kind of talk about these moments out of China. I'm wondering if what we're starting to see is just a flood of cheap compute, right? Is China going to flood our markets like they did with trinkets back in the early 2000s? Have they built up enough compute? It's not as good as ours, I don't think, and they distill it from our models probably, which helps on their costs. But the reality is they have the electricity grid, they have enough chips, and they seem to be able to flood our market. I would not be using Chinese compute, but a lot of people might. So that, to me, I hadn't really thought about that until in the last couple of weeks, and it's coming more and more in conversations. That's my concern, is real cheap competition from China, circa what we saw back in the 2000s, where they just flood our market and it slows down our build.
There's a whole body of literature on the so-called China shock from that time. If we have another China shock, what would it mean for the backdrop for the economy and for markets?
I think it would be awful. Just my best comparison right now is probably look at BYD Automobile in Europe. I was in Europe last week. I had to go check out one of the showrooms. They're interesting cars. They are now dominating sales in Germany, right? So they are eating away at stuff. Does that come to us? I don't think it should. And the other problem we didn't really mention is, I think the concept of not in my backyard does not exist in China. I don't think anyone would say, oh, you can't build that here, like with any expectation that it wouldn't happen. And you're seeing that really grow in the U.S. I thought it might be a 2028 issue. It's coming quickly.
You said that the risk is that it would slow the build of compute in the U.S., which is kind of exactly opposite of what some people are expecting from earnings. They're expecting the market to potentially reward companies for reducing their capex spend on building out compute. Do you see it differently?
I think the companies that may reduce their spend and get rewarded, the debt diet sort of companies, they might do well. But what's that going to do for the picks and shovels, right? All the companies that were supplying into this. And again, I think it's very dangerous for the economy as a whole. For the last year or so, we've been looking at this kind of as a two-part economy, the non-AI part and the AI spend part. So if you get any slowing down on that, the construction that goes with that, all those things I think would really hurt the economy.
Right now, a lot of different analysts are trying to split up the Mag 7. They're saying the Mag 7's dead. There isn't such a thing anymore. The tech is being segmented into different segments, and you're seeing rotations through them. Is that a positive? Is that a negative? Is that a bear sign? Is that just a natural evolution where everything is AI?
I think it's a natural evolution. And look at Apple, for example, right? Apple did not invest a ton in AI, right? They kind of let the market develop. Their stock's doing high. I believe they're just off all-time highs. So the market's trying to figure out who's winning, who's losing, what's priced in. Again, I was really excited about earnings about 2 weeks ago and what we've seen. And I go back to Micron. Awesome earnings, right? Great guidance. 2-3 years of chips sales. All those things were right. Stock went up. And it's given it all back and then some. So I think people are now thinking about not this quarter's earnings, not even like next year's, where are we headed 2-3 years down the road. And for the first time, I think there's some question, will there be competition? Are people, even in the U.S., trying to create alternatives? And, what we've seen in these sorts of cycles, you get these parabolic moves up. Anyone who's bearish kind of has to be quiet, duck their head. And all of a sudden, people can feel a little bit more comfortable. And I'm still waiting for more and more CEOs to say, we love AI. It's really helped our company. My sense is, people are starting to feel some pressure on the token utilization. Everyone used to have these leaderboards, and the more you spend on tokens, hey, you're the best person here. Now people are, so what exactly do we get that? So I think we are due for a bit of a pullback, and some of it will come with allowing the more negative or concerned narrative to play through as well.
Well, we saw some of that concern when it comes to at least policy in the gubernatorial races for New Jersey and Virginia. It was all about electricity prices. This year, especially with the moratorium in New York, it's about data centers, not my backyard. How much of a political risk is there to this trade?
I think there's a decent amount. I think you're seeing kind of this not building in my backyard is kind of step one. Again, there are lots of states that want this business. They do want it. But my bigger concern, and this is probably more down the road, is you could start seeing some sort of windfall tax, some sort of tax. People, again, I hate the concept of universal basic income, but you're seeing this chatter about this in South Korea, and I could see some group of politicians saying, you know what? You guys make too much money, we're going to tax you, we're going to do something, and that would really be bad for stocks. And again, I think we need our data centers, we need this for national security, we should be growing it. I think the industry has to do a better job communicating the need and that they're good for us, and they have not done a good job. So I'd like to see this, but I think the risks are there and real.
I'm going to ask you a question based on the title of some research from Jonathan Krinsky of BTIG. Do you think a high correlation accident is brewing here?
I could see that. So one of my concerns is we've been talking to some people, and if you think about various factors, right? You have momentum, you have all these factors, and a lot of the really best hedge funds kind of run their positions based on these factors, and they're trying to organize it. And one of the sense I get is AI is starting to creep into a lot of these factors. So you think you don't have an AI exposure, but you do. And so all these things have become very correlated. And I would add that market structure to me is just awful. I hate all these triple leveraged ETFs. I think there's like 8 or 9 leveraged ETFs on SpaceX alone. It's only out 2 weeks. Like, why do we bother with single stock leverage? SOXL, SOXL, is a $20 billion triple leveraged ETF. You have 0-day expiration options, weekly options. So yeah, I think when this happens, it can happen really, really fast. We saw a bit of it last week. I think maybe we get a bounce. People are looking for their earnings, but the next wave, I think, could be fairly ugly. So I like that phrase, the high correlation train wreck or whatever.
Accident, potentially. Potentially.
Potentially,
we've got to ask. Yeah, that's another way of looking at it too. Look, everyone is exposed to AI, even if they don't think they are, because you're either exposed to the spending directly or the wealth channel. Lisa was half joking, but she was right last week when you were asking the airlines whether they're an AI trade as well, because of the amount of spending coming from very particular places that are built off the wealth being created by all this AI spending.
Where's the business spend coming from? It's coming from defense. A lot of it is tied to AI, as well as the financial sector, because everyone's flying around trying to get the business. At a certain point, even if it's not necessarily directly tied to it, everyone feels a lot better because stocks are going up. You also start to wonder how interconnected emerging markets are, say, to the United States in ways that they just haven't before, and how much volatility can be introduced given the lack of understanding of where we're going in the next
So
few
we
years.
get earnings, I think, from SK Hynix in the next week.
Yep.
And I was looking at the calendar and I was thinking, OK, that's a risk event for US markets, isn't it? Earnings from a South Korean company. Now, a few years ago, that was absolutely unthinkable. But that's where we are.
Again, I think a lot of things have been tied in. Again, we were always going to pay some attention to South Korea, but we get a little bit more looped into this. And again, we have all these leveraged ETFs. The Koreans have all sorts of these leveraged products, right? And my one thing, I'm starting to pay a little bit of attention. If you kind of watch, you had, I would say, the really gambling sort of crowd loved crypto. They were in that sort of space. And it looks like they shifted their attention much more to the tech and AI build-out, quantum. And if that set of money pulls out, at the margin, that's a reasonable chunk of money. And you're starting to see some inflows into crypto again. So maybe people are going to reposition where they get their most bang for the buck.
OK, so this all sounds super bearish. So help me find that hedge to that high correlation accident if it materializes. Where do I go?
Right now, I think you want to be a bit in Europe. I think you want to be in the companies that will, I know it's kind of scary to say, but
it's the anti-AI trade. It's hysterical. Carry on.
Well, actually, and it's also their designed to build out their own things, right? I think just today I was coming in and Bloomberg Radio was talking about Bezos making an investment in a European AI company. So I think Europe is finally starting to get the joke. Again, they'll probably screw it up a couple more times, but they have to make their own things. They have to get their own electricity. Right? It'll be really curious to see what the new prime minister does in England. I think they should be releasing BP. They should be doing these things with the North Sea. They should be really expanding their energy base. And I think Trump kicked the hornet's nest and said everyone's got to do more of their own thing and buy U.S. Yeah. I think countries are starting we should do more of our own things and become vertically integrated. We're not going to buy as much U.S. So I think that creates opportunities, particularly in Europe. I actually think Canada's probably decent on that front. Carney's, I think, been playing tough, has been rewarded for that. So I would say, and even in the U.S., the grid needs to be built out. Even if we slow down data, I think anything that's, we've sold off a little bit in the electricity and the grill bill, I think that has to be done regardless of how the AI spend goes. So I like that sector as well here.
Pete, it's good to see you. Thank you, sir. Peter Tchir of Academy. Speaking of the UK, we should hear from the new British Prime Minister, Andy Burnham, later this hour. Looking forward to that. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Moonshot AI getting ready to go public. Sources telling us here at Bloomberg it could seek a Hong Kong listing in as few as 6 months. The Chinese AI pioneer is wrapping up a fundraising round that could value it at more than $30 billion. Boeing is working through a supply bottleneck as it plans to ramp up production of its top jets, with hopes to make more than 40,000 planes in the next 20 years.
We're turning the corner. I tell my team we haven't quite finished turning the corner. We've got more work to do, but I am pleased with the progress so far. We're ramping up production across many of our product lines. Markets are very strong, so our backlog is very, very strong. So our story is really focusing on executing that backlog.
Shares of Boeing trading nearly flat so far this year. Spain are World Cup champions after defeating Argentina 1-0 in extra time. Substitute Ferran Torres scoring the decisive goal. Spain dominating possession, Argentina failing to make a single shot on goal in what may have been Lionel Messi's final game for the country. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you very much for the update. More from Vonnie later this hour. Up next, an escalating campaign.
We hit them very hard again tonight. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. We control the Strait. They don't control anything.
9 straight days of strikes. Up next, Henrietta Treyz of Veda Partners. Later this hour, we should hear from Andy Burnham, the new British Prime Minister. Looking forward to that in the next 60 minutes or so. We'll hear from Lizzie Burden as well on the ground outside number 10 Downing Street. Look forward to that in the next hour or so. Looking ahead to this week, tons of tech earnings. Alphabet, Tesla, Intel on deck, and one central bank in particular in focus, the ECB. Now, A month ago, this wouldn't have been considered a live meeting, but this move in crude will get this ECB's attention, even if many believe it shouldn't.
Yeah, people are wondering whether the rhetoric truly has changed, because we have heard some people talk about the concerns about some sort of penalty to growth in Europe. At this point, given the fact that we saw more than a 15% move in crude, the fact that you've seen much greater moves in distillate products coming from the Middle East, and that suddenly we now have no traffic going through the Strait of Hormuz, will they feel the necessity to penalize their economy again?
Brent crude around 90 this morning, 88. I know which side of the debate you're on.
I mean, I do.
Around 82.
But is the market not saying the same thing? The market's saying, okay, September you'll move one more time and then you'll be on hold for the rest of it. If they were to surprise to the upside, do you think it would be a strengthening in the euro action, or do you think that it would be a sort of penalty with respect to growth expectations?
No, what you're saying is not original. Everyone agrees with you.
Thank you.
Everyone agrees.
It's not original. I'm going to sit back down.
No, everyone agrees with you. I'm saying everyone agrees.
No, it's true. This is like, but at the same time, they're talking tough. So let's see if they come through.
Yeah, I think people would expect the more hawkish they get, the worse it gets for the European economy.
Correct.
Right. We are where we are. Okay.
Yes.
Okay, we're done with that. Let's talk about energy. Under surveillance this morning, an escalating campaign.
We hit them very hard again tonight. This is a far bigger job that we're doing. We were doing a little job of stopping them from having a certain capability. Now we're just ending it. We control the Strait. They don't control anything. We're ending any chance where they can have a nuclear missile.
So here's the latest this morning. The US conducting a 9th straight day of strikes on Iran following the deaths of 3 service members over the weekend. The Iranian Foreign Ministry confirming the receipt of mediator proposals earlier this morning. Bloomberg's Tyler Kendall joins us now for more. Hey, Tyler.
Hey, John, good morning. Well, even as we got signals from both sides that diplomacy is still an option on the table, this was a weekend marked by escalation. CENTCOM saying in a statement overnight that this latest wave of strikes by the U.S. was designed to degrade Iran's ability to target commercial shipping in the Strait of Hormuz, but to also, quote, swiftly punish the IRGC in response to the death of those American service members. And our own analysts at Bloomberg Economics say they now only expect this week to flare tensions further as observable traffic in the Strait of Hormuz appears to be at a near standstill today, according to new satellite imagery analyzed by Bloomberg News. And there seems to be new risks for vessels who had been transiting without their radars on, with the IRGC saying it halted at least 4 vessels over the weekend that had turned their transponders off, considered to be one of the safer ways to make it through the waterway. Now, we got this statement from Iran's foreign ministry earlier today saying that it is determined to, quote, fully exercise its sovereignty and prevent any security threats in the Strait, seeming to indicate that they're not letting up their leverage when it comes to that, though did add that the diplomatic apparatus, in their words, had been active in the last few days. John, the U.S. Secretary of State Marco Rubio did confirm as much. He said that over the weekend, the U.S. received strong signals that Iran is willing to negotiate, but that there is a big split among the hardliners that want to keep fighting and the more moderates in the Iranian government looking for a deal.
Tyler, thank you. What does the off-ramp look like? Henrietta, Treyz of Veda Partners writing this. IRGC control of Hormuz is worth more to Tehran than a warhead. It is a weapon they can deploy at will and then deploy again. Expect escalation rather than resolution in the days and weeks ahead. Henrietta joins us now for more. Henrietta, good morning and good to see you here in New York.
Great to be with you.
What does a solution look like, given the quote I've just read from you?
I think that we are on day 9 of what will be a pretty expansive, protracted engagement on the military front. I'm discomforted, I guess is the word to use, by the frequency with which I hear administration officials and those in the sort of tertiary military space talk about boots on the ground, Carg Island, escalating militarily. The reality remains that the Port Authority of the IRGC is just simply unacceptable to the Western banking world. Whether you're an insurer or a tanker getting through, or JPMorgan trying to do business with any industry that wants insurance or wants to, deal in getting flow through the Strait. So it's, as long as that's unsustainable and incompatible with the Western economy, we will be at war.
They're moving some more warplanes to the Middle East. We also have Secretary Hegseth and Joint Chiefs of Staff General Kane speaking to the Appropriations Committee tomorrow in Congress. Are we going to get more funding for this war?
Not anytime soon. And I think the timing is really important to watch, especially when you think about what the U.S. consumer or any consumer is going to be dealing with in gas prices. So the sequence of events is helpful to follow here. The House members are going to be in session for the rest of the week. It's going to look like there's progress on getting Pentagon funding out the door, but really then they're going to leave for 5 weeks. The Senate is nowhere on the reconciliation bill. My odds of passage are 30% at best. The only reason I'm that optimistic, though, is because think about how much longer this war is going to escalate. To John's point, and sort of the military component that you're talking about is we're going to be in this until the end of August. J.D. Vance's, 60-day window is, August 20th, I want to say. So we'll definitely bump up against that. We'll have no stimulus from the Congress side, and then they'll come back in September. And if the war is still raging, gas will be $4.56 again, which is where we saw the president call off the war last time. And the single most effective way to get rates down was to stop the war. So as we're way out into September and even October and heading into the election, there's going to be optionality for a stimulus bill, for some funding for the Pentagon, maybe a gas tax holiday. Those are options that exist, but not for months.
But the House and the Senate are in session this week, and they won't together be back in session, to your point, till the middle of September.
Right.
Will they need to do something before September if we're dealing with above $4 a gallon gasoline?
That's a possibility, but I think you'd have to get up to $4.50 like this week in order to have them move. In order to cancel the August recess, they just don't do that. You guys know that as well as I do. They don't cancel the August recess. It's inviolable. So as long as they want to get out of town, they won't be doing anything.
So none of the War Powers Act or any of the potential or legislative constraints on what President Trump can do in Iran really comes into play when they're on vacation? Is that the issue, that essentially that's not even up for debate and potentially isn't even a constraint later on?
That's definitely the case right now. I mean, there's a couple events that are happening at the end of this week. The president needs to decide what to do on tariffs. So I find that is important to be mindful of. I know the street is exhausted of tariffs. I'm sorry, I'm not. The tariff authority is going to be available to the president at the end of this week if Jamieson Greer has done his job correctly, because the Section 122 tariffs expire. So if you're mad at Spain, if you're mad at France for not sending enough anti-mine capabilities, or the UK or anybody, this is your opportunity to make a choice. Do you want to keep penalizing everybody the way that you're doing with Iran and go to effectively a tariff war with those nations and ask them to get involved in the Strait, and whether it's peacekeeping missions or military missions, this is your opportunity. And he has that chance this Friday.
Is there a sense that President Trump will go hard on some of these tariffs at a time when the Iran war is escalating and he's looking for greater alliance cooperation to potentially fight back some of the IRGC actions in the Strait of Hormuz?
I think it's a glaring absence and has been since the war was announced. And the sequence of events is really fascinating to think through. I mean, the Supreme Court took away the president's tariff authority on February 20th, and we started bombing on the 28th. That is just so noticeable throughout the entire duration of this military war, the fact that the president hasn't been able to say, you will come with me to the Strait, you will help me in the Strait, unless, or else I'm going to tariff you. You know, we saw that through all of 2025. I don't like your digital services tax, boom, you get 100% tariff. Here, we have the same kind of thing, and he just doesn't have the authority. He will have that authority come Friday.
Doesn't everyone love Spain now? Because everyone hated Argentinian football for the last 6 weeks.
They did for a brief night, and then evidently, right? I mean...
We don't like Spain again.
You know, it seemed like President Trump even steered away from his dislike of Spain to stand there.
He got involved in it yesterday too. Yeah, sure.
He was really desperate to be on that stage.
Well, yeah, perhaps. But either way, putting differences aside to stand there and look at the trophy, hand out awards, rings.
Henrietta, it's good to see you. Thanks for being here.
Thanks
for dropping by. Henrietta Treyz of Veda Partners. I think we've got some live pictures coming from the UK. We'll carry on tracking this for you. Just moments ago, it became official. Andy Burnham becoming the UK Prime Minister after meeting with the King Charles, asking the newly appointed Labour leader to form a government. He'll now make that short trip, approximately 1 mile from Buckingham Palace to number 10 Downing Street. When he arrives at number 10, we should have a brief speech from Andy Burnham, and we'll figure out what the future looks like for the UK economy through one thing alone, I think, in the next 24 hours, figuring out just who the next Chancellor of the Exchequer will be.
Yeah, how business-friendly will this administration be at a time when he really does represent the progressive wing, the 7th Prime Minister in 10 years? A time, how do you get a sense of stability given that backdrop?
Lizzie Burden on the ground at number 10 Downing Street. We'll catch up with Lizzie in 15 minutes' time. The the open about 2 hours away. Equity futures bouncing by 1/3 on the S&P 500. On the Nasdaq, up by 0.8, following some pretty big losses last week on the Nasdaq, down about 4% plus on the Nasdaq 100. Elsewhere, some relative outperformance on the Russell, only down by 0.5% this morning, higher by 0.4. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Start with the chip stocks. They are rebounding this morning with names like Intel, AMD, and Nvidia all higher in the pre-market. The rally, of course, coming ahead of a very pivotal week where we get tech earnings, Alphabet kicking things off on Wednesday. And it also comes after Chinese startup Moonshot had that AI breakthrough that reignited questions about whether these increasingly powerful models can be built with far less. But before those tech earnings take center stage, we've got to get through the popcorn and the pizza first, because we got Domino's earnings out this morning. Shares are up 7.4%. And this is an interesting one because it's one of the first gauges on the consumer during earnings season. The pizza chain beat revenue estimates and said order growth picked up during the second quarter, but it wasn't all rosy. Same-store sales were the weakest in more than a year, but so far investors seem encouraged by that order growth picking up. And we end on AMC. Those shares also soaring in the pre-market, now up 17% after a 1-2 punch of strong earnings and a blockbuster opening weekend for the Odyssey. The theater chain topped revenue and profit estimates. It also says that over 4.3 million people visited AMC worldwide this weekend, and it was AMC's biggest opening weekend for an R-rated film since 2024, and it even had to keep some theaters open 24 hours. John.
The stock is flying, up by close to 17%. So far this morning. Yahira, thank you. On our radar this morning, the US attacking Iran for a 9th consecutive day. Tehran retaliating with strikes on US bases across the region. Iran's foreign ministry saying it has received proposals from mediators. Elsewhere, the Trump administration vowing to rein in gas prices.
Gasoline prices today are more than $1 a gallon cheaper than they were 4 years ago under the Biden administration. And we'll do everything we can to drive them further down in the weeks and months ahead.
The national average for gasoline returning to $4 a gallon for the first time in a month. 9 straight days of attacks between the US and Iran helping to lift crude prices above $80 a barrel. And finally, the Secretary of State, Marco Rubio, confirming a September meeting between President Donald Trump and the Chinese leader is still on track.
We anticipate that the trip is happening in September. I have no reason to believe that they won't be coming. It's important. There will always be, when you have two big, powerful countries like the United States and China, there are always going to be irritants. There are always going to be things we don't agree on. But I think it's incumbent on powerful and important countries like ours to continue to talk and have a relationship.
Fresh tensions emerging between the nations after President Donald Trump accused the Chinese government of interfering with the 2020 election.
Yeah, and it's not just the U.S. side that is saying that these talks are set to continue. You're also hearing from the Foreign Ministry spokesperson saying that head of state diplomacy plays an irreplaceable role in providing strategic guidance to bilateral relations, and that there is still communication regarding this visit. How do you come up with the parameters for a relationship between these two nations at a time where tensions are clearly rising and rhetoric, clearly from President Trump, getting hotter and hotter?
Well, at the ASEAN summit where Secretary Rubio is going to be, he'll meet with his Chinese counterpart Wang Yi, and that will really set the groundwork, I think, what's going to be on the table in September. I think off the heels of what we learned yesterday from the Kimi K3 model, this AI narrative is going to dominate the summit, especially as Xi Jinping, when that came out, was presiding over a Chinese AI summit. And what they had is a new group of 30 countries to talk about AI governance around the world. Obviously missing was the United States.
This would be another China shock. You heard this from Peter Tchir of Academy this hour, Bramo, talking about the kind of things that I know you're focused on as well. We could have a situation where China's exporting something super cheap at a time when America has spent a tremendous amount of money trying to pursue the same thing. If there is a vulnerability right now in the US armor, it is certainly the AI story for both the market and the economy alike, a vulnerability that we've seen China exploit in the last week and in the last 18 months multiple times.
Yeah, what Peter Tchir was talking about was the export of cheap compute, the idea that they have all of these energy resources, renewable energy resources, nuclear energy resources, et cetera, that gives them the ability to power a whole lot more than here in the United States. And if they started to sell that more cheaply, particularly given the fact that they've got these open source models that are getting better and better, it raises this question of how many people would actually go there, how many people would actually use that, and what that would do to some of the investments in the United States. A lot of questions, unclear. A lot of people watching what we're going to see from earnings to get a sense of exactly what the CapEx plans are and how far ahead the U.S. actually is with some of these models.
Alphabet kicking off those earnings later this week for the hyperscalers. Investors, of course, looking for that justification for AI spending. Ron Josey of Citi expecting CapEx projections for next year to reach over $800 billion US, writing, "We believe this is by far the top focus into 2Q earnings, given continued AI demand and rising component pricing." Ron joins us now for more. Ron, let's get into those numbers. Are you seeing any market-based pushback that would lead to a rethink of CapEx intentions from some of the big players?
At this point, not really. I mean, that's the biggest question going into earnings, as we just talked about. You would think if there was more pushback, I think the equities would actually come back a little bit more than they are. Frankly, right now, we are waiting when Google announces on Wednesday. We're waiting for them to really reassert their strategy and where they want to go, meaning that we have delays on Gemini, on some of their models like Gemini 3.5 Pro. We've seen some issues where they're sort of falling behind on other things. And so what we really want to see is, what are they going to do with all this CapEx that's being spent? And as you said, we just raised our numbers because we think there is a strategic asset involved if you've got the compute, if you've got the intelligence, and really the energy as well. And that's something that Google's really racing to have. So if you have those three, yeah.
I just want to jump in because different companies are doing different things with that compute capacity. And Meta's an interesting example of that. Just on Friday into the weekend, we had the New York Times leading reporting that they're looking potentially to lease computing power from its data centers to the likes of Anthropic. Do you expect to see more of that kind of opportunistic move from the likes of Meta and maybe others too?
Well, I think if you have, and I don't want to use the word excess capacity because I'm not too sure there's excess capacity out there. Everyone we talk to, everyone we sort of have conversations with, talk about the term insatiable demand, and the demand's there and it's outstripping the supply. With that said, if you're Meta, we've been a little bit delayed in terms of their personal superintelligence or Meta superintelligence strategy. And so if in fact they do have these 8 gigawatts of power, maybe going to 14 over the next year or so, and they have extra power available, I think they're looking around and seeing, well, maybe we can actually get some dollars back or subsidize some of the costs that we're doing with our capacity and compute that we've built out. So I think we do see more of this, assuming there's capacity available, and maybe Meta's the best one to do that, simply because we're waiting for these new products to come out. And, you know, when these products come out, rarely is it a big bang where you launch and then you have demand that exceeds capacity. It probably takes a little bit of time to adopt it.
Is there any way that these hyperscalers in particular can show return on investment that would make an increase in CapEx beyond expectations worthwhile for the market?
Well, we're looking at two things, really. Really, if you're talking about Google here the next week or next couple of days, I think there's like 3 things that we're looking for. Of course, we're looking for Google Cloud revenue growth. We're looking, as part of that, their backlog or commitments in terms of pretty much guaranteed spend over the next couple of years. And that's a number that's been growing incredibly strong over the past couple years, frankly, to help highlight what is the demand for Google Cloud and really the demand for AI. But then we have on the Google other side, which is their, which is Google Search. And we think Google Search can grow 17% this quarter. It's growing because of these AI investments, because of their investments in Gemini. And frankly, people are searching more. So if you're Google, and even Meta for that matter, you're building on both and Amazon, you're building the consumer side, but then also have this massive opportunity on the B2B side. And that's something we're looking at as well, right? So that's the commitments, that's the revenue for Google Cloud, and that's, of course, the core Google Properties business.
Do you suspect, Ron, that we're going to see, or that we already have seen signs that truly Chinese tech companies have started to cannibalize from U.S. tech companies, whether it's in models, whether it's in compute, whether it's in international clients? I mean, are you getting any sense that that actually is coming to fruition?
Well, I think one thing that's absolutely coming to fruition is the fact that these open source models are now weeks or months away from the frontier models. And we are absolutely seeing a compression of timeline of new models being launched. And these models, these state-of-the-art frontier models, are second to none. And so what we're seeing for sure is the open source movement is absolutely catching up at a faster pace, which is certainly causing us and everyone on the street to say, okay, we're investing all these dollars in intelligence and compute and energy. yet for only to be copied down the road, or not copied, but frankly followed. And so that's going to be a key theme and topic, I think, on Wednesday and also into next week with Meta and Amazon numbers.
Ron, looking forward to the coverage coming from you and the team out of Citi. Ron Josey there of Citi, looking ahead to Alphabet and Tesla later this week. Alphabet, a very different story compared to where it was 12, 18 months ago. That stock left for dead by some people. Big turnaround by that company.
And they've really gained market share in a couple of different levels. There is this question about Gemini getting pushed back, their latest model. Will it actually matter based on how people are using it? And really, how much will that affect their CapEx plans? I think that'll be really interesting. With Tesla, big question, when are they going to get taken over by SpaceX? I mean, that's the key question. Right. And how big is the premium going to be?
Maybe the only question. We've got some live pictures coming out of the UK for you just moments ago. Andy Burnham, the new British Prime Minister, until recently former Mayor of Manchester, meeting with the King, King Charles asking him to form a government after accepting the resignation of Sir Keir Starmer a little bit earlier on this morning. Andy Burnham now making the very short journey from Buckingham Palace over to number 10 Downing Street. Approximately 1 mile, should take only a few moments. When he gets to the other side in front of number 10, we expect a brief address from the new Prime Minister. We'll start to talk about his outlook just a little bit more for the economy, and we start to find out who fills certain cabinet positions, and certainly for this programme, the Chancellor of Exchequer very much top of mind. Lizzie Burden on the ground outside number 10 Downing Street. We'll catch up with our very own Lizzie in about 2 minutes' time. Before then, let's get you an update on news elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Oil erasing earlier gains after Iran's foreign ministry said it received proposals from mediators regarding its war with the US. Escalating hostilities in the Middle East, raising concerns over a supply crunch with global stockpiles, excluding China's, at a record low. Alibaba shares rising in the pre-market. The company releasing a preview version of its flagship 10 3.8 Max model, describing it as second only to Anthropic's Fable 5. The release coming after Moonshot launched Kimi K3 on Friday, which it said outperforms all rivals except for Fable 5 and GPT 5.6. President Donald Trump says the luxury jet gifted to him by Qatar will be taken out of service to be, quote, maxed out. The plane will get additional defensive capabilities. Trump says he plans to take the plane to his presidential library when he leaves office. And that is your Bloomberg Brief. John.
Vonnie, thank you. More from Vonnie a little bit later on in the programme. As I mentioned just a moment ago, the new British Prime Minister, Andy Burnham, making his way to number 10 Downing Street after meeting with King Charles just moments ago. Lizzie Burden is on the ground, where number 10 is set to receive the British Prime Minister in just a few moments' time. Lizzie, what are you expecting to hear from the man himself?
John, I've got to say, I feel at home in Downing Street right now. The throngs of Andy Burnham supporters behind me come with a lot of northern accents. This is, of course, the former Mayor of Manchester. It has been a remarkably bloodless coup to become the Prime Minister. In fact, he is the 11th of the past 19 Prime Ministers to do so without an election. And he's the first since Alec Douglas home in 1963. To do so without an election, going straight from outside the House of Commons into that black door behind me. So they're all waiting to clap him in. We already clapped Starmer out. He made his resignation speech earlier. He said that Burnham's got his full backing, that he goes with a smile on his face, he goes with good grace, tried to tell us what his legacy is, trying to connect what he's done to what Burnham will do, getting Labour back into power. So now we're waiting to hear a bit more clarity on what Burnham's going to be doing as Prime Minister, and as you say, crucially, who is going to be his Chancellor.
Well, Lizzie, to that point, there was a line from the new Prime Minister going into the weekend. Andy Burnham said on Friday, make no mistake, I will be a pro-business leader of the Labour Party. We'll define that, Lizzie, in the short term at least, by who he chooses to be the Chancellor of the Exchequer. Lizzie, we have a decent idea of who it might be. Just run through that name for us.
Do you know what? We heard that all before when Labour were trying to get into power with the smoked salmon and prawn cocktail offensive. It looks like the front runner is Shabana Mahmood, and in comes the car into Downing Street right now, John. Andy Burnham arriving with a series of other cars coming from Buckingham Palace. We know that he's met the King already. He is already the Prime Minister. There's no lectern out, by the way, which is unusual because it seems that self-styled king of the north wants to do this without a lectern, maybe without notes, and wander around with the microphone to promote this image of him as the man of the people. But he's just about to get out of the car. Here he is, you can hear the applause. Andy Burnham there greeting his many supporters, shaking hands with them. He's with his wife, of course, and we are expecting this speech. You asked me who his Chancellor is going to be. Shabana Mahmood, as I say, is the front runner. She is currently the Home Secretary. The appeal of her is supposed to be that she's a blank slate. In other words, she has no Treasury experience. Surely that's a worry for the markets. But in our Markets Live Pulse survey, Ed Miliband, the Energy Secretary, was the least market-friendly candidate. 5% voted for him. Shabana Mahmood only got 11%, so not much better. But the market very worried about the idea of an Ed Miliband chancellorship. Mahmood seen as somebody who gets the job done, perhaps more fiscally conservative, but we'll have to see. Burnham, though, in an interview last week with the former footballer Gary Lineker, was talking about the need to pay more when it comes to taxes. He also told the Times, though, that efforts to characterise him as a tax raiser were simplistic. So, given the fiscal bind that the UK finds itself in at the moment, where is he going to get the money to spend on all of the many pledges that he has made to differentiate himself from Keir Starmer? Because, of course, he's going to have to find things to spend on to justify why Britain needed a new Prime Minister. We know that he wants to invest in devolution away from the South. We know that he is going to put efforts into nationalisation. That won't come for cheap. All the problems that plagued Keir Starmer will beset Andy Burnham as well. He's got to contain the welfare bill. He's got to reinvigorate productivity. He's got to overhaul social care. And he's got to cut immigration if he wants to fend off the threat of Reform UK and Nigel Farage. So it's a tall order on top of the things he wants to do. Another question, how is he going to relate to Donald Trump? Already, we know he's preparing to announce new drilling for oil and gas in the North Sea. Trump's already praised that. A question of whether Trump has overinterpreted what he's going to do. We know he's going to take public control of Thames Water, but what we've been reporting is that the economic forecasts on Burnham's desk today are going to be pretty bleak. Higher inflation, lower growth, higher interest rates. Oil maybe at $150 a barrel because of the Iran war. So it's a difficult situation. But look, this is a man full of optimism today. It's a moment he's waited for a very, very long time. And we're going to hear from Andy Burnham in just a moment.
If you are just tuning in, welcome to the programme. It's the handover of power in the United Kingdom from Sir Keir Starmer to the former Mayor of Manchester, Andy Burnham. Let's listen to the 7th Prime Minister in just the last decade in the UK.
Thank you. I have just come from Buckingham Palace, where I have accepted His Majesty the King's invitation to form a government. In doing so, I am acutely conscious that I am the 6th person in the last 10 years to walk up this street, the 7th Prime Minister since 2016, making this a moment for reflection and new resolution. It requires my generation of politicians to raise our game and rise to the new challenge. Britain needs to show the world that we can regain our stability once again. And that is our challenge, to make politics work, to make it work better. I know people at home are fed up with politics. I hear you, and I want to be honest with you. We have not been good enough, and we need to be better. We will be. We will make this moment a circuit breaker for Britain, bringing forward the biggest changes in the last 40 years. A new political model and a new economic model. In the 1980s, Britain took some wrong turns. Political power was centralised, economic power privatised, large parts of the country deindustrialised, and they still haven't recovered. Many feel as though they're still in decline, and they don't have the ability to turn things around. And that's why we will change politics, to make it more collaborative, more about problem solving than point scoring. And we will take power out of here and carry it into every postcode in the land so that they can do more. And in doing more, build a new economy where we put life's essentials back under stronger public control to make them affordable to you again. Reindustrialising Britain, using public procurement to back British industry. Later this year, I will bring forward a new plan for Britain, a 10-year plan, laying out a path from where we are now to where I believe we all want Britain to be, wherever we're coming from, whatever party we support. But I can do something to give people some breathing space now, some help with the cost of living. And I will set out some of those measures starting tomorrow, including how we pay for them. We will help more young people into work by changing the education system and giving them more support, more mental health support. And we will build more council homes. That is the fair and sustainable way to bring the welfare bill down, to meet our fiscal rules and to honour our commitments on defence to our international partners. We will help people to live well, building a more preventative state, investing in people's success rather than paying for failure. And that work starts now. I will soon go through that door behind me and issue my first instruction to end rough sleeping in our country. It's about putting the right values and the right standards at the heart of government. I will put the care of people at the heart of everything I do. I will give this my all, and I ask you all to pull with me. Let's build a new national sense of unity, of common purpose and positivity. Let us make this the moment when Britain starts to believe again, the moment we bring back hope. Thank you very much, everybody.
The new British Prime Minister Andy Burnham speaking outside of number 10 Downing Street just moments ago. As the Prime Minister suggested, it's a situation you're all familiar with by now. We've seen this many times. It's the 7th Prime Minister in a little more than a decade. It's on the edge of becoming routine, a routine that Andy Burnham would like to end. He's talking about a 10-year plan and regaining stability, ending this situation and becoming somewhat of a circuit breaker. On the ground outside number 10, Lizzie Baird. And Lizzie, the new Prime Minister talked about a 10-year plan. He also talked about doing things sooner than now. What can we expect in the next 24 hours?
Yeah, he also talked about giving people some breathing space in the immediate term and that he's going to set out a plan for that. We already knew that the cost of living was going to be a priority for Andy Burnham, but just think how that's gone for previous Prime Ministers because, of course, John, the cost of living is so tied to the international picture where Burnham would prefer to focus on the domestic. There's not that much that he can do about outside inflation, so he could end up with a very, very hefty bill if this is what he wants to pin himself to. He has said that he's going to meet the fiscal rules. He reiterated that. And once again, we got a reiteration of his commitment to devolution. So once again, a broad vision here, but still a little bit more of a sense of the timeline from the new Prime Minister, Andy Burnham there, who's greeting his supporters just in front of Downing Street right now.
Lizzie, thank you. Appreciate the coverage this morning. We'll allow you to take it all in. The next stop for that conversation, cabinet positions and who might fill what. The Chancellor of the Exchequer very much in focus. If you're just joining us, welcome to the programme. Equities near session highs by 0.5% on the S&P 500. Crude near session lows. Some reporting just moments ago.
Out of Reuters saying that mediators have passed the Iranians a proposal to de-escalate the war with the United States, a 10-day ceasefire. Let's see what the United States has to say about that.
We'll pick up on that reporting in just a moment. We'll catch up with Pyle of BlackRock, Colin Sebastian of Baird, Greg Daco of EY and Ozan Tarman of Deutsche Bank. The third hour of Bloomberg Surveillance is just around the corner.
All eyes, make no mistake, right now within tech are on AI and everything within that ecosystem.
The only thing more impressive than the performance of semiconductors has been that volatility.
Hyperscalers are punching above their weight here.
You are likely to see some unwind in momentum.
The choice is you stay involved or you fall behind.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now and your price action looks like this. The bounce continues. We had some weight to it just moments ago. Equity futures up by 0.5 on the Nasdaq, up by 1 percentage point. In the bond market, yields look like this. 2s, 10s, 30s, 2 still around 420, just about unchanged at 418. This board is not unchanged. Crude, WTI and Brent rolling over just moments ago. We are negative on the session now by 1%. Brent at 87, WTI at 81.
Yeah, Annmarie mentioning that report coming out of Reuters talking about some potential 10-day ceasefire to revive an interim U.S.-Iran deal. Just earlier this morning, we were saying, where are the contours for any type of agreement, considering the fact that there seemed like a complete breakdown in both an escalation over the weekend, more ammunition and resources from the U.S. being moved to the region. That said, this is promising. And based on the market reaction, people looking for any sign of hope for some sort of resolution and taking it and running with it.
Leaning into the possibility that potentially we get 10 days of a ceasefire, potentially more commercial vessels can go through the Strait of Hormuz. But right now, it is just a hope. It's from the mediators, which have been working all weekend while the escalation was at really a heightened level. With 3 U.S. service members killed this weekend, the president is moving more assets into the region, according to a number of reports. And the Iranians are continuing to fire at things like desalination plants in countries like Kuwait, really going after U.S. allies in the region.
This is potentially the uncomfortable new normal. We've heard that from several guests over the last several weeks. You have a situation that is very difficult to deal with, a messy set of negotiations, unworkable proposals followed by another unworkable proposal, punctuated by round after round of strike, and then the off-ramp appears. And maybe you take it, maybe you don't, perhaps you do take it, and then you end up in exactly the same position several weeks down the line. And now persistence, if you've indicated, persistence becomes its own problem. The longer it goes on, the more elevated energy is, and the smaller and smaller the cushion becomes for the backdrop for energy, and that becomes a bigger and bigger problem for policymakers the world over.
Yeah, people say, well, why should I get bearish? Why should I get bullish on oil prices based on what happened 2 months ago when the escalation was that much more present? But then there were the cushions of the stockpiles. Now those have been whittled down significantly, and the margins for error are getting smaller and smaller. So at a certain point, do you reach a break point when it comes to the actual amount, particularly of distillates available to a lot of different countries, potentially causing a seismic sort of sea change in the levels?
I said moments ago that crude was lower, and it's not anymore. It's just turned around. I want to handle this headline with a lot of care and be very careful with it, but I'll share it with you, that the Houthis have announced a sea navigation ban on Saudi Arabia. Now, the Red Sea, a key part of the story here, because yes, the Strait of Hormuz is blocked, but the Red Sea so far hasn't been disrupted, and a lot of energy is rerouted through the Red Sea. Now, calling on the Houthis was a threat of the Iranians for some time now. That headline crossing just moments ago.
And more headlines saying that the Houthis will impose this sea navigation starting today, on Monday. So that means that potentially, and this is potentially, we could see 2 choke points in the world cut off. One, of course, is the Strait of Hormuz, which pretty much you have a grinding halt when it comes to commercial vessels moving through that waterway. And then the Bab el-Mandeb Strait when it comes to the Red Sea. And this would be incredibly problematic for the global oil market because that has been a key source for Saudi Arabia to move product.
A massive release valve, a clear support for this market. The amount of energy that came through the Red Sea, if that's compromised, we've got a new problem.
The fear was that some of the affiliates of Iran would start to get involved, that the Houthis would essentially get engaged with this. They haven't until this point. This is a sign of further escalation. And at what point do we take that as the signal versus what we're hearing from the Reuters reporting? All of this still leaves us in the realm of rumor and lack of understanding of where we're heading, which is the reason why there's a lot of jitteriness and unwillingness to take big bets. If you're an oil trader, what do you do with this? I mean, in the past 20 minutes, what do you do with this? Do you have conviction? Do you have liquidity in the market? I mean, this is something that has been incredibly challenging.
Brent this morning at 88, WTI around 82. Coming up this hour, we'll catch up with Mike Pyle of BlackRock, with stocks shaking off geopolitical risk. Colin, Sebastian of Baird looking ahead to Alphabet earnings. Great echo calling for the Fed to stay on hold this year. We begin this out with stocks rising as investors shrug off geopolitical risk, with energy still brewing in the background. Mike Pyle of BlackRock writing, investors are contending with a much wider range of plausible outcomes around growth, inflation, rates and geopolitics than we've seen in recent years. Mike joins us now for more. Mike, good morning and perfect timing. It's good to see you.
Good to be here.
What's changed about this backdrop that leads to these wider range of outcomes?
Well, I think a whole bunch of things. I mean, one, just structurally, a lot more uncertainty around the macroeconomic backdrop measured over years. Wider range of outcomes on growth, on inflation, on geopolitics, on trade, the whole list. But then you look, literally, whether it's weeks, days, hours, minutes, we see that illustrated again and again just in the lead into this section. I mean, I think if you look at what's happening in the Middle East, I think a couple of things are true. One, there isn't a satisfying path ahead strategically. The paths of escalation, none of those look satisfying. That's been clear for many months. The paths of diplomacy similarly don't look like they lead to anywhere particularly satisfying. And that's why I think we've seen this toggling from one to the other. Exactly to your point, Lisa, that's happening against the backdrop of a world where those cushions and shock absorbers that have prevented this from really spilling over the past many months are drawing thinner. And it leaves us in a pretty fragile place, and fragile in particular to news like what you just articulated around potentially the Houthis stepping in. That's been one of the dogs that hasn't barked in the many months since this conflict began. If it were to begin barking, that's maybe a shock that could shake some of this fragility.
We're dealing with this in real time, but let's go a few steps deeper. Let's say the dog starts barking. What do you think that would look like if the Houthis followed through on this threat this morning?
So, like Annmarie said, I think one of the things that's been really noteworthy since the start of this conflict is that the margins of adjustment proved to be more significant than a lot of experts forecast. That was true in terms of toggles around Chinese demand, toggles around U.S. supply, and the drawdown of global, both public and private reserves. But a key source of cushion has been finding alternative paths out of the Gulf for Gulf production, with the Red Sea being at the top of that list. So I think, all eyes need to be on whether or not those flows are still able to reach global markets out of the Red Sea. Again, conflicting signals this morning. On one hand, a suggestion that there's a de-escalatory path ahead. On the other, building on news this weekend around the Houthis that they may be stepping in. I think it just highlights that we need to kind of keep a very close eye, because again, that Red Sea path has been such a key margin for adjustment for global markets against a backdrop where those cushions are drawing down.
And you were in the White House the last time the Houthis did this. So what's the immediate policy reaction?
So I think the immediate policy reaction is to, observe, understand what exactly is being articulated here. But I do think that, the lesson of that experience is, as the lesson of the Straits of Hormuz has been, that it doesn't take a lot of military force projection to really slow or stop the willingness of commercial shippers to ship through sea lanes that are threatened. And so to me, that sort of highlights why it's important here that, against the backdrop of a lot of uncertainty, we find a diplomatic path that can de-escalate and reopen these sea lanes.
This is a direct target on Saudi Arabia. I thought that they have had better relations as of late with the Houthis.
Yeah, I think clearly, if you look at the past many months, I think, again, a big chunk of the reason why that dog hasn't barked since the start of the Iran conflict has been, a relatively stable relationship between the Saudis and the Houthis. I think that a lot of people have thought that might be coming under increased strain. Obviously, we've seen news in recent days to suggest as much. And again, kind of the past couple of minutes here highlight that may be coming to fruition.
Are you positioning for higher oil prices ahead than people previously expected?
I think what we're positioning for is a world that's going to continue to have a lot of variance around it. And I think to us, that means that whether we're looking at dispersion around technology in the AI trade, dispersion around outcomes in energy markets, dispersion around a range of different rates paths, including with respect to the Fed, variance, uncertainty, dispersion, these are just hallmarks of markets right now and the global macroeconomic backdrop, which to us highlights and underscores the need for active management to be navigating these currents. And we've seen that play out in terms of the ability of alpha strategies to be really additive to portfolios.
If I were Jamie Dimon or Ted Pick and I were hearing what you're saying, I would say ka-ching, because that's going to keep my trading revenues very elevated for a very long time. Is this a tradable market or a trading market, not an investing market, because of all of these cross currents?
Listen, I think that the fact that we led with is, whether measured on minutes, hours, weeks, quarters, years, this is a market with a lot of variance in it. And that means that managers that can either navigate those currents and have a track record of doing so, or managers that can identify uncorrelated streams of return that can dial down a lot of this noise, those are especially valuable, which is, I think, why one of our core pieces of advice now for the past number of quarters has been the role that market neutral strategies have in a portfolio greater than normal, precisely because of this variance, precisely because of uncertainty around the global bond market picture, et cetera, et cetera. But this just, to me, highlights a sort of, the same advice we've been offering for a number of quarters continues to be kind of core advice now, as seen even in the past minutes.
The noise is deafening this morning, let's put it that way. Mike Pyle of BlackRock, Mike, thank you. Bring up the price of crude, Brent and WTI. It's unchanged on the session, but think of this as a tug of war with a lot of tension. And we're going nowhere right now, but the pulling is pretty vicious in either direction. There is a very bullish scenario for crude and a bearish scenario for crude. All of that in the last 60 minutes or so. The bearish scenario, a ceasefire proposal, apparently coming from mediators in the last 60 minutes or so, according to the Iranians. mediators have been working actively over the weekend. The bullish scenario for crude and bearish for the situation across the Middle East is this headline that crossed just moments ago that the Houthis are willing to impose a maritime blockade on Saudi Arabia.
What's fascinating is that people are treating these as equal, even though potentially the bullish position for oil is one that's coming more directly from the source, first of all. And second of all, is something that people have been scared of happening for quite a while. So again, this speaks to where the bias in markets is, which is looking for the off-ramp rather than to see the escalation that could potentially leave oil prices even higher than where they are now.
We're talking about 4 million barrels a day that Saudi Arabia has been using their east-west pipeline to their terminals on the Red Sea, mostly Yanbu, that they've been able to get product out through this entire crisis. It's been a lifeline. And also, to Lisa's point, coming directly from the source, we heard on Friday that this was a potential threat from the Iranians and the Houthis. And now it looks like they are trying to make good on that threat. Now, again, is this just a threat to potentially push back the United States in some of these attacks, or is this real? And if it is, that is going to be incredibly bullish for the oil price.
9 days of strikes between the US and Iran, and we're confronting this morning de-escalatory risk and escalatory risk simultaneously this morning, with Brent crude just about unchanged. Let's give you an update on news worldwide with your Bloomberg brief. Vonnie joins us for more. Hey, Vonnie.
Hey, John. Yeah, just to recap those headlines in a volatile session for oil, as you've been saying. They're all out in the last 20 to 30 minutes. Reuters reporting mediators are proposing a 10-day cessation of strikes between the US and Iran. And then shortly after that, we got the headline: the Iran-backed Houthis announced a, quote, maritime blockade on Saudi Arabia. Andy Burnham is the UK's new Prime Minister. Speaking at 10 Downing Street after meeting with the King, he said he will bring forward a new 10-year plan for Britain this year. He's expected to appoint his cabinet in the coming hours and days. The Odyssey winning the weekend box office, the film bringing in $124.5 million in ticket sales in the US and Canada. The movie, based on Homer's epic poem, stars Matt Damon, Tom Holland and Anne Hathaway, among other stars. It received a critics' approval rating of 96% on Rotten Tomatoes. And that is your Bloomberg Brief. John.
Vonnie Quinn, thank you. Thanks for the update. More from Vonnie in about 30 minutes' time. Up next on the programme, the Morning Calls Plus, Colin, Sebastian of Baird. Looking ahead to earnings from Alphabet in just a few days' time. Live from New York City this morning. Good morning.
Essentially, what we've been hearing in recent weeks is that people think that there's a bit of profit-taking, momentum unwind, but that things are really more technical than fundamental in nature. And those are the kind of environments we want to step into and look for opportunities.
We were looking for a quiet start to the trading week. We haven't got one. That was Calvasina of RPC. Equity futures are positive, up 0.4 on the S&P. No problem there. Bounce back on the Nasdaq following losses of about 4% on the Nasdaq 100 last week, up by 0.8%. Not a big problem there, although there has been a problem in chips given the correction we've seen there into bear market territory as of Friday. In the bond market, 2s, 10s and 30s, yields just about unchanged. It looks snoozy, kind of is, up a single basis point at 420. But for crude, anything but a snooze. I know we're unchanged on the session, but the tension around the price of oil right now is sky high. Just in the last 60 minutes, the last 45 if that, we've had a proposal for a ceasefire on the table reportedly, and at the same time we've got a proposal for real escalation.
Right, this could potentially choke off the Red Sea and the Bab el-Mandeb Strait, which has been critical for Saudi Arabia to move oil and other products because they haven't been able to rely on the Strait of Hormuz. They've been relying on their east-west pipeline. They've been able to get 4 to 5 million barrels a day out using these terminals. And the Houthis are saying that they will impose a maritime blockade on Saudi Arabia in retaliation for what they say is the kingdom's siege on the Yemeni capital. And they say the blockade is effective immediately.
So some big two-way risk to confront this morning in the energy market. Brent around 88, WTI around 82. That's the price action. Let's get you some morning calls. First up, Wells Fargo cutting its price target on semi, expecting the company to continue to beat and to raise. Your second call from Philips Securities upgrading Netflix to buy, expecting earnings growth to re-accelerate over the long term. That stock hammered into the weekend and no bounce this morning. And your third and final call comes from Stifel cutting its price target on IBM, citing its below consensus preliminary second quarter results. Took him some time. That stock is down by 0.6%. Forgive the snark. It's been a few days, though, hasn't it?
The market already re-rated that stock, and ultimately, a lot of people have already soured on that.
Losing about a quarter of its value in a single day. Let's talk about the next tech story. Alphabet kicking off big tech earnings on Wednesday. Pressure building on hyperscalers to justify some massive spending. Bloomberg's Ed Ludlow has a preview. Good morning, Ed.
Yeah, good morning, John. It's not necessarily just now the scale of spending that's being tracked. So through this week, Alphabet, but also Intel, where the spending's getting captured, right? The expectation for the Google parent is 20% top line growth. They will be big in the commentary on what the trajectory of their capital expenditures are, but probably the first to give real evidence that something comes out the other side of that, that there is demand that is being met as a result of their infrastructure expansion. Intel's the other side of that trade, right? A big part of the bear market you reference, which was very short-lived, right? Basically the 16th through to the start of the morning session this morning, was the anxiety around the Kimi K3 release. But it's not just necessarily that more efficient AI systems mean less hardware. There's a lot of optimism that in Intel's case, we'll see a lot of pace in revenue growth because their data center business, their foundry business is responding in real time to demand that's still there. That's the expectation for this week, though we had a little bit of a nervous weekend after the surprise release from Moonshot.
Without a doubt, a rocky Friday, that's for sure. Ed, thank you, sir. Looking forward to the show. Bloomberg Tech just around the corner, a few hours away, right here on Bloomberg TV. Colin, Sebastian of Baird writing the following. Google is continuing to show positive momentum with a range of AI-related products and services. Colin joins us now for more. Colin, welcome. I'll try and make this simple, but I imagine it involves a complex answer. If they increase CapEx intentions, if any of them increase CapEx intentions over the next week, is that a headline this market punishes or rewards?
Well, I think there could be a reaction to that initially, but really the key question isn't how much they're spending, it's the follow through into revenues, margins, and returns. And Google's backlog, as we've seen last quarter, we think they'll reiterate that is extremely strong. We'll see it in their core products. So it's really a balance of both the spending and the returns. And we think Google should deliver on both, even if they do tick up the CapEx guidance.
Is that enough, Colin? The idea of backlog, and we've heard this continually, that demand continues to outstrip supply. Is that good enough if they don't show a commensurate increase in revenues that show that they can monetize this and charge their customers more?
I agree with you. No, I don't think that's enough. I think we need to see accelerating revenues in Google Cloud Platform for the quarter. We think it'll be the fastest growing of the hyperscaler platforms. Expectations are higher, of course, just given the amounts of spend and the demand. But we do think we'll get that follow through with Google Cloud. And also the margins. The margins are a key point because that demonstrates the return on investment. And Google Cloud Platform margins should continue to be stable, at least according to our checks.
Does it matter that Gemini's latest iteration isn't available, or at least it was pushed back a couple of months? Or frankly, is this a feature, not a bug? The idea that it's sort of the less frontier-like models that they're able to offer at cheaper prices, but disseminate much more widely and gain traction, given the fact that Google search has continued to dominate. Is that something that you're looking for?
Well, we think there are going to be, fits and stops related to model releases. But, at the end of the day, the model itself is becoming more like a commodity, and more of the value is becoming more of the platform and the applications. And that's part of what Google is offering, is a very strong platform offering, irrespective of the model strength. But it is something we track pretty closely because it is sort of core to the fundamental part of their AI initiatives.
Who do you think has the best model right now? Is it Anthropic?
I think according to enterprises, Anthropic is the leader right now in terms of adoption and usage. Although what we're hearing more broadly is that enterprises are becoming more cost-oriented, meaning they're using more of the lower cost, in some cases, the Chinese large language models, at least to start, to do experimentation. And then once they move into more production of workloads, that's when you see more stickiness, I think, with some of the closed-walled garden models such as Anthropic and Claude and OpenAI, et cetera.
Well, you mentioned the Chinese models. What do you know about them? Are you concerned about this Kimi K3?
Well, I think we've had these DeepSeek moments a number of times over the past 2 years, and it's really favorable in terms of the overall AI development, right? That there is competition, that there's global embrace of the technology, but clearly a lot of companies based in the US that are very dependent on their models, they need to remain competitive. And I think there is a difference between open source and there's a difference between some of the walled gardens and the security and the applications related to those. But we watch it very closely. Obviously, the initial indications on the new model are fairly positive.
Colin, Jan 25 feels like a lifetime ago. What's the biggest difference between then and now for you?
I think that the ability for companies like Google to demonstrate that AI has a very fast return on investment is probably the biggest difference. And we're starting to see that now play out, not just with Google, but with other companies, including Amazon and Meta. So I think it's a very exciting change, I believe, in the overall environment.
Colin, appreciate it. And looking forward to the numbers and your coverage of them. Colin, Sebastian there of Baird on Alphabet with a 400 price target and an outperform rating on the name. They report on Wednesday. The following Wednesday, you'll hear from Microsoft and Meta. The following Thursday, so next Thursday, not this Thursday, you'll hear from Amazon and Apple. All stacking up for a big week for the big tech names.
Yeah, and the key question really is going to be how much dispersion is there going to be, because we're entering a phase of winners and losers. Scott Cronert of Citi saying that the Mag 7 is dead as a construct earlier this morning. So ultimately, who is going to be the winner? Who is going to gain cloud computing in terms of their overall pool of share of the pie? And who ultimately can pledge to continue to increase spending and justify it, but increase ROI that they can prove?
It's funny watching how Apple trades from day to day when these guys all get caught up in a bit of trouble.
Is this the uncorrelated trade?
Right. For those guys, sure, just not spend it.
I mean, that's their objective. They want to come in and win on the back end.
Nasdaq futures this morning up by 0.8%. Up next, we'll catch up with Greg Daco of EY-Parthenon, expecting the Fed to stay on hold for the rest of the year ahead. The open about 60 minutes away. Equity futures bouncing back from Friday's losses. Two-day losing streak on the S&P. We're bouncing back by 0.4%. The weekly loss down about 1.55% through last week. On the Nasdaq, down more than that. On the Nasdaq 100, down about 4 this morning. Positive about 0.9. The chip sector having a really rough run of it. We're down about 20% from the highs of June. Only, 4 weeks ago?
Yeah.
It's a very, very big decline in a short amount of time.
Yeah, is it because of fundamental whipsaws when it comes to the expectations for the AI deployment, or is it because of SK Hynix and Samsung and leveraged ETFs and single name holdings in South Korea? I mean, ultimately, are we talking about just a highly technically challenged backdrop for some of these chip names, or are we talking about something fundamentally changing with respect to the way that models are forcing the hand of certain places, like in other words, DRAM versus some of the other capacities that NVIDIA specializes in?
It's quite interesting how well the markets ring-fenced the chip issue. To see that massive decline and a bigger weighting on the S&P 500, and then to see what's happened elsewhere. I think the bank sector's up for 7 weeks. KBW Regional Bank Index doing really nicely as well. Some of those banks trading at all-time highs, so it hasn't pulled down everywhere else. In fact, everywhere else is starting to pick up. In fact, Mike Wilson of Morgan Stanley, writing this morning, publishing in his Monday note that he's expecting more of that rotation in the weeks and months ahead.
And he's not alone, even with some people saying that small caps could outperform. A lot of this predicated on the idea that there still is a disinflationary force outside of, say, what we're seeing with respect to oil prices that potentially will allow the Fed to remain on hold and keep things in a place where you can see recovery in the rest of the universe. I would say that the financials have benefited from the whipsaws in some of the semi-names. It's not exactly ring-fence. It's benefiting from them because the trading revenues have been absolutely bonkers. But the key question is going to be how long can the AI train continue to chug along with respect to financing? And if you do see that continue to evolve, the rest of the market can continue to feel some of the benefits, as we've seen from other sectors as well.
Huge profits at the banks. The IPOs are just going to be huge. We've had a record IPO already this year. Equity capital raises. Every time they come to borrow, these banks are making money. And every IPO we get, you've said it, you get the IPO and then you get the debt offering straight afterwards. So these banks will make more money off those same things. Let's talk about the bond market. 2s, 10s and 30s. 2s around 420. So last week after CPI, we said that's the sound of the door closing on a July rate hike. That meeting's not live anymore. And then I read the Beth Hammock statement on LinkedIn into the weekend, and I just thought, okay, it's not live for the market, but it might be live for a few policymakers in that committee going into that meeting.
Yeah, there is no conflict of the dual mandate that employment is just fine and inflation is a real problem. And she said for the first time in her tenure, and frankly, in her memory, she's hearing business leaders come to her and say, inflation's a problem, do something about it. Is she representative of a mainstream of Fed officials, or is she singular in her hawkishness? Ultimately, the market's been working with this and ultimately stagnant. I mean, what's notable is that amid all of the whipsaws that we see, the MOVE index, the implied volatility in Treasury yields going forward has been remarkably low. It sort of isn't this sense of uncertainty with respect to how big the moves are. It's sort of a stasis because of the push-pull that we see under the market. And that, I think, maybe is giving people confidence, even though we really don't know the path of travel.
We've been quite range-bound. The centre of gravity for the front end of the curve around 420. We're around 420 this morning. Switch at the board and get to the commodity market. Brent and WTI, what a mess it is in the Middle East. How do we sort this out? Brent this morning around 90. We breached that level just briefly in the last, let's call it 90 minutes. Just for the sake of conversation, in the last 90 minutes, we've had a proposal, at least a reported proposal for a ceasefire. And in the last 30 minutes, we've had the Houthis come out and say they're ready to shut down the Red Sea for Saudi Arabian shipping. Now, that's quite a headline if they follow through.
The oil market right now is at a fork in the road, and it's either going to be potentially an off-ramp with 10 days of a ceasefire. This is what Reuters is reporting as mediators have offered the Iranians, or it's going to be more escalation and a second choke point in the world for oil and oil products can potentially get shut off. If the Houthis decide to shut off Saudi Arabia's maritime navigation, that basically means that 4 to 5 million barrels a day on the high end could be taken off the market because that's how much they've been moving through their east-west pipeline. So right now, it seems like threats and reports, and we just don't know yet. But two huge catalysts.
Mike Pyle of BlackRock was talking about the wide range of outcomes that we have to confront, the two-way risk, if you will. Just think about it. If you get one headline, we could retest the post-war lows. You get the other headline materialize, you could retest the post-war highs very quickly.
So what do you do? I mean, how do you trade? And he's saying uncorrelated assets. What's uncorrelated to all of these different aspects? I mean, given the fact that ultimately everything's an AI trade, and ultimately when it comes to the consumer, everything is related to the cost of doing business and just how much inflation is going up.
Let's talk about some single names, some stock movers this morning. Yahara has more. Hey, Yahara.
Hi, John. Well, before we get to tech earnings later this week, we got to get through the bucket of popcorn first. We start with AMC. Those shares up 20% in the pre-market after a 1-2 punch of strong earnings and a strong opening weekend for the Odyssey. The theater chain topped revenue and profit estimates. It also says that more than 4.3 million people visited AMC theaters this weekend, and it was AMC's biggest opening weekend for an R-rated film since 2024. Turning to tech, we turn to this name. Iron shares are soaring nearly 10% in the pre-market. If you didn't know, this is an owner and operator of data centers for the likes of NVIDIA and Microsoft, and it says it signed $2.8 billion in new multi-year AI contracts, and because of those deals, it's raising its AI cloud revenue target to more than $4 billion, up from $3.7 billion. And we end on the chip stocks. They are rebounding this morning with names like Intel up 3% in the pre-market. After last week, the sell-off brought it into bear market territory. Now investors have a chance to reset with tech earnings. Alphabet starting on Wednesday, and the focus, of course, will be on AI spending after the Chinese startup Moonshot raised questions about whether these increasingly sophisticated models can be made with much less. But as we heard from our analysts, ultimately the deciding force may be whether these companies can prove a return on investment. John?
Yahara, thank you. Thanks for the update. So, for the Federal Reserve, the so-called blackout period begins. No Fed speak going to the Fed's next meeting. Many of you, I'm sure, are very, very happy about that you don't have to follow all these Fed speeches. I can think of one man that's even happier than all of you, and his name is Kevin Walsh, the Federal Reserve Chair, because he doesn't want much of that happening Anyway, Mike McKee joins us now for more. Mike, good morning. Kevin Walsh, yourself included, I'm sure. We got a little bit of Fed speak going into the weekend. It was the Cleveland Fed president, Mike. It was Beth Hammer making a statement on LinkedIn, which I felt like for some people, Mike, maybe that meeting is live a week or so away.
Well, at least for discussions, perhaps, of dissents at the meeting. Wall Street doesn't think it's going to be a live meeting at the moment. I think we're doing this week backwards, maybe, because if you're on Wall Street, you kind of want to have a busy day Monday, Tuesday, Wednesday, so you can go to the beach early on Friday. But all the news for us this week is at the end of the week. As you just showed on the calendar there, we have jobless claims on Thursday, S&P PMIs on Friday, as well as new home sales. Now, none of those are really going to influence what the Fed is doing. But if you are on Wall Street, you need to have something to do. And so you'll be positioning yourself into the weekend in terms of what the Fed is going to do. And you can see the volatility priced in for this meeting. It's been crazy with the war sending prices up and down and people's concerns about inflation up and down. Right now, we're not looking at much of a chance at all of a rate increase. But again, it is, as you mentioned, the Beth Hammock issue, Lori Logan, are those people going to be dissenting? If you do need something to focus on, I guess you can go see the Odyssey. That'll take up 3 hours of your time. Or you can worry about these things, and worry about means in the bond market, of course, trading. New tariffs on Friday are possible. The president's 120-day IEEPA tariffs run out. So is he going to impose new tariffs? Probably. The question is how much and on whom, and how will that play into the inflation picture? The FOMC meetings of July 29th, September 16th, and October 28th become interesting dates because the feeling is if this is not a live meeting, then maybe September, because they're not going to do October because that's right before Election Day, November 3rd. And that will become a big issue for the markets as we get closer and closer to that date. And now the president even has put a government shutdown on the calendar as a possibility for October 1st. And that'll be something else to keep in mind. So there's stuff out there, but it's just not this week that's going to be moving a whole lot. We'll be waiting for Kevin Walsh to come out next Wednesday and give us something to chew on.
If he comes out. And if we get
if he comes out, that is true.
We'll see. We'll see.
I'm going to go down there and wait for him just in case.
Just in case. We want your coverage of the event anyway. Michael, thank you. We've all been talking about the prospect of them maybe not having a news conference.
I mean, he said unless he has something to say, he's not going to have a news conference. Is he going to set a precedent?
We'll see. Stay tuned. Or not. Greg Daco of EY-Parthenon writing, we do not believe the July FOMC meeting will be a live one. Our base case remains that the Fed will stay on hold through the remainder of the year. Greg joins us now for more. Greg, good morning.
Good morning.
Hammock of Cleveland, Logan of Dallas, voting members, do they dissent in a week's time?
I think they dissent, but I think the Fed does not move. I think the Fed is going to be on hold through the rest of the year. The reason being that if you look at the inflation developments, even though patience is running thin amongst all on the committee, you are in this environment where you have some disinflationary currents that are likely to carry the way through the end of the year. Tariff pressures are past their peak. You're seeing there's still the effect, the pass-through of lower energy prices, even though we've seen this reacceleration in oil prices and gasoline prices, but there's still a disinflationary effect there. And then, very importantly, the labor market is not inflationary. Wage growth is still trending down towards 3.5%. That's not inflationary. That should not be a source of inflation going forward. There are risks, however, and I think that's very important to keep in mind. September, very much a live meeting, and the next meetings after that, October, November, and December, will also be live meetings. But I think the Fed will eventually end up on the side of not tightening monetary policy this year.
Do you think if we get those dissents that they compromise the leadership of the new Fed chair, or do they actually do him a little bit of a favour through the summer?
I think that's very important to keep in mind because during his testimony, 2 days of testimony, he said a lot, but very little in terms of his views on inflation, his views on monetary policy. He was cryptic at best. He did not say whether inflation was this number or that number, which for a Fed chair, you would expect at least to express one view of a number, a gauge of inflation. He did not express any views as to whether he thought there was disinflation in the pipeline. He did not express any views as to whether the AI-led investment boom is inflationary in the short run. These are all topics that the Fed chair should be addressing. So I'm thinking that he's trying to hide in some ways behind the committee, and that even if the committee were to push for a rate hike in September, he might take that as a view of saying, well, actually, I was in favor of maintaining monetary policy, and I was not in favor of raising rates, but I did vote with the committee because that's the right thing to do.
Bill Dudley came out with a Bloomberg opinion piece where he said that the Fed should tighten at this point. He said there's little evidence that monetary policy is currently restrictive. Do you agree, particularly as evidenced by what we're seeing in capital markets?
I think you have to distinguish two things, right? You have to distinguish the real economy from capital markets. And when it comes to how tight monetary policy is, I think for some sectors, it is relatively strict. If you take us back to where we were back in March, before the onset of the conflict in the Middle East, you were seeing ongoing disinflationary pressures. We were heading towards that 2% target. So it wasn't as if there were inflationary pressures that were coming from strong demand and strong economic activity. When you look at capital markets, when you look at the equity market in particular, you are seeing a lot of forward momentum, which tells you that financial conditions are not restrictive. So I think you have to disentangle the two and depart from one view being tight for everything versus one view being tight for one thing versus the other.
The other aspect of Bill Dudley's point is that there's a credibility issue here for the Federal Reserve, that they can talk a big game, but if they don't execute some sort of action, then ultimately it will fall on deaf ears. Do you agree with that?
I agree with that. I mean, resolute commitment, as Chair Warsh said a few times, is not enough to convince everyone that there is the possibility of the Fed tightening. If you are really having that resolute commitment, you have to act upon your words. You can't just use words. And one paradox here is that Chair Warsh has been very critical of the prior Fed. He said that inflation has been a choice and that policy mistakes were part of the reason why we had a prolonged period of elevated inflation. If that is the case, then you have to act upon the higher inflation that you see, and you have to bring inflation back down towards 2% in a rather rapid way. The key question here is, does tightening help alleviate the demand-driven pressures? That's really the key question, because we have pressures from the supply side. The Fed can't really do much about the supply side pressures, oil prices, tariffs. They can't do much about that. The key question is whether demand-driven inflation from AI is something the Fed can address. I don't think higher interest rates detracts hyperscalers from investing and continuing to put that upward pressure on inflation. But if you do raise rates, you tend to tamp down demand across other sectors, and that's where you can get some disinflationary pressures. But does the Fed want to sacrifice other sectors in the meantime while you're seeing a lot of investment in AI continuing to drive inflation? That's really a hard trade-off for a lot of policymakers.
Greg, it's good to see you. Always is. Thank you, sir. Greg Daco there of EY-Parthenon, looking ahead to that Fed decision a week or so away next Wednesday. Let's give you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Moonshot AI is getting ready to go public. Sources telling us here at Bloomberg it could seek a Hong Kong listing in as few as 6 months. The Chinese AI pioneer is wrapping a fundraising round that may value it at more than $30 billion. Gas prices are on the rise again. AAA saying the national average for a gallon of regular gasoline is now above $4. Energy Secretary Christopher Wright saying the Trump administration is trying to bring them down.
Gasoline prices today are more than $1 a gallon cheaper than they were 4 years ago under the Biden administration. And we'll do everything we can to drive them further down in the weeks and months ahead.
Right, also saying oil will continue flowing through the Strait of Hormuz with or without Iran's help. Vice President J.D. Vance and his wife Usha announcing the birth of their 4th child, a son named Alec Neil. This is the first child born to a sitting vice president in more than 150 years. Vance has advocated for Americans to have more children and has expressed alarm about the country's declining birth rate. That's your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate the update. Up next on the programme, we'll set you up for the week ahead. Plus, we'll catch up with Ozan Tarman of Deutsche Bank as markets face what he calls a perfect pre-August storm. From New York City, you're watching Bloomberg Surveillance.
I think we are due for a bit of a pullback, and some of it will come with allowing the more negative or concerned narrative to play through as well. When this happens, it can happen really, really fast. We saw a bit of it last week. I think maybe we get a bounce. People are looking for their earnings, but the next wave, I think, could be fairly ugly.
Something could be fairly ugly. Peter Tchir of Academy. Let's talk about the beautiful game just touching down in Spain. The Spanish national team and new World Cup champions. Rodri touching down with the World Cup in his hands just moments ago. The whole team getting off the plane following a 1-0 victory over the Argentinians yesterday in New Jersey. Can we stop calling New Jersey New York now? Are we done because the World Cup's officially over?
I think that's fair. Although I don't know what the judges are going to say about that. But I will just say that ultimately, this is a group of people who have just had an incredible run. They make everybody look bad in their play, in their style of play. Have they slept? Are they just? Have they just been celebrating nonstop?
I doubt it. What a run! What a defence as well, conceding 1 goal the whole tournament.
Unbelievable.
It's
No
crazy,
shots
isn't it?
on goal.
What a
at
record.
all.
In a tournament, by the way, which averaged close to 3 goals per game.
This wasn't exactly a low-scoring game.
Right, and so in a tournament where you're talking about on an average per game, the highest scoring tournament since '82, for total goals, the highest scoring tournament ever, and of course the extra round of games contributed to that they only conceded 1 goal across all the games they played. That's bonkers.
They played a different kind of game, and I kept watching the passing, the camaraderie.
You enjoyed
the
it, and I just found it suffocating.
I know.
But you know,
it's fascinating. Patience.
Right, they're very happy with themselves. Great news. What is it about New Jersey pretending they're New York sometimes, right? Newark Airport pretending that's New York.
New York City region.
Is that what they do?
Yeah. It's
right.
the tri-state area that weighs in.
It is a tri-state area airport, but it's certainly not New York.
Can I just say, putting the World Cup on the floor, what are you doing? Can't do that. Can't do that. What are they doing? Pick it up.
Yeah, that's kind of crazy. I feel like if it touches the concrete, it should have like a blanket.
Can you imagine if
something.
Trump did that? What people would say. Anyway, let's
apparently they edited Trump out of their Twitter photo from the Spanish team or government. A million people said it to me today.
Why wouldn't he just get off the stage? Come on, just let them have their moment.
Yeah, it had really nothing to do with the United States besides that it was played here. He was part of the trophy delivery. That seemed to be enough, and then he was supposed to exit stage left.
My producer reliably informs me this is about it touching Spanish soil for this first time after the win, okay?
Right.
A meaningful moment. Let's get back to the markets. Stocks rising ahead of a big week for tech earnings. Alphabet just a few days away. Ozan Tarman of Deutsche Bank was up all night celebrating Spain's victory. He joins us now for more. Ozan, good morning. It's good to see you.
Wonderful to be here.
What did you think of the game? What's your review?
Even the red glass. The right team won. The best team won. I like Messi, but too much negative football at the final.
Hard to disagree with that. Your market view, pre-August, was set up for something dicey. Why?
Because we're getting a little bit too carried away on the belief in carry, on the positioning. Maybe a bit like people believed in France too much. October to December, October to January, that a bit reminds me of that. For a while we said, oh, it's just a healthy rotation. All of a sudden rotation becomes a bit more nervousness. So watch out, especially this Wednesday, Google earnings. I think it will be very, very important. Because what does my Binky say when he comes here? It's still 8,000. Conservative now 8,000, but still believes in higher markets because of earnings. What if earnings come in and we don't get excited?
What does a perfect storm look like?
Good question. Perfect storm in terms of positiveness, two ways. Perfect storms in terms of nirvana looks like, I'm not so sure about that, but August, all worries going away, rates lower, equities higher, risk parity parties. Perfect storm negative. Even as I walk in, Houthi, Saudi, does Israel get sucked back in? Oil doesn't relax. It doesn't do these physical oil levels that 150s that people we dreamed about, but still stays sticky. Google's of the world come up with good earnings, but we do a SK Hynix, we do a TSMC, IE, we don't rally too much afterwards, and we shake. I'm not too sure about that either, by the way. I think it will be a little bit in the middle. EM carry will do okay. Chop.
What's funny to me is that perfect storm on the upside is nirvana, and the perfect storm on the downside is it might be a little shaky. I mean, is that notable to you in terms of positioning or how you're talking to people? There isn't a belief that you're actually going to see some sort of material drawdown in the story that has driven all economic growth, which has been artificial intelligence.
That's the third pillar. So we keep going between AI, Iran, and Fed. AI, right before Iran war, it was all deflationary, 50% of white-collar jobs will be gone. Now everybody, including my research, believes on AI inflationary. But all of a sudden, look who's outperforming. Apple is doing much better than NVIDIA. All of a sudden, it becomes more fashionable not to spend that much on the AI chips. Maybe Ben Affleck, after all, had some points. So, look, I think football, right? I think we're not even in the 70th minute or 6th to 7th inning of the AI boom.
Or the second quarter, as we now say in football.
Oh man, yeah.
After FIFA's a big adjustment.
But you know, when we do get too crowded, I think some of the cream will be taken out.
You're known on Wall Street for hosting these macro dinners around the world. Is there robust debate, or does everyone pretty much feel the same way about where the market is right now?
There's two more coming in New York now, but first I start with survey. Yes, there is. If anything, I think in June, with no disrespect, in one of my smaller ones, the peak of AI, maybe the bullishness I sensed there. Nothing can go wrong, AI revolution, etc., etc. So in New York, I expect that to be questioned a lot more. Some positions have been washed out a lot. When I last came here, like just 3 months, right around the Iran war, everybody and their brother believed in short US rates versus long euro. European doldrums versus, wars coming in, talking hawkish. We would go to 480s, 485s again. Did not work at all. Compared to US rates, European rates continue to sell off. Again, Deutsche Bank, blue tie, Spanish rate. Finally, John, Germany did do the infrastructure reform, at least pass it. So the good old Bund is staying at 3.15. So talking about pain, right? UK, similar, walking in with Rodri, walking with Burnham. So far, no trust rate. Chancellor there will be important.
Very.
EC paying a bit of a diet to the markets by going Mahmoud.
Ozan, it's good to see you, buddy.
Oh, we can go on and on and on.
We could all day. We will after the show is finished.
Exactly.
It's good to have us in the studio. Hey, Ozan Tarman there of Deutsche Bank. From New York City this morning, good morning to you all. Thank you very much for choosing Bloomberg TV. Tomorrow, here's your lineup. This is Bloomberg.